Hello, everyone. Good day. Thank you for joining us in today's workshop. So, I see lots of you joining us already as attendees, which is fantastic. So, very big welcome to the training session and great to have you here. So, we'll give you a moment just to find your audio settings and get yourself ready in the session. So, feel free to introduce yourself in the chat whilst we're waiting to get started if you'd like to do so. I'll just say a reminder right at the start of the session that we're fortunate to be joined today by our English to Mongolian interpreter, Basra. So if you'd like to listen to the Mongolian audio channel, you can select this in the interpretation toolbar. My colleague Lois has just posted a message to explain that as well. So please do make use of that interpretation option that's available if it's useful to you. Okay, with that, I see we have lots of you here already, so let's get started. So, a big welcome to this half day of training on applying the IFRS Sustainability Disclosure Standards. This program is truly a collaborative effort driven by that demand we're seeing for more support to implement the IFRS S1 and S2 standards. So, firstly, I'd like to start with a big thank you on behalf of the UN SSE team to the IFRS Foundation and the IFC are partners in this program. And of course, a particular thank you today to our hosts, the Mongolian Stock Exchange and the Mongolian Sustainable Finance Association, alongside the invaluable support of the team at UNDP, and particularly the FC4S project team as well. So a big thanks to all who've helped to organise today's session. And of course, a big thank you to all of you who've joined us today as participants as well. It's great to have you with us. Excellent. So to get us started, I'm pleased to say we have a number of opening speakers joining us today. So firstly, I'm very pleased to introduce Anya Mungbayaskalan. Apologies for that pronunciation, which I'm sure wasn't very good. Anya is the Chief Regulatory Officer of the Mongolian Stock Exchange. So many thanks, Anya, for joining us, and I'll hand over to you to open the session. Thank you.
So hello everyone, can you hear me all?
Yes, we do. Yes.
Okay, so our audience is Mongolian, so let me start speaking in Mongolian first. And thank you very much for hosting us and thank you for your collaboration. За энэ та бүгдийн өдрийн мэнд дэвшүүлээ. Тэгээд Стоосын доктортой байдлын тодруулгын стандартууд одоо нэвтэрснээр дэлхийд дахинд одоо компани тайлгууллын шинэ үе шат эхэлж байна гэж бид нар ойлгож байна. Тэгээд доктортой байдлын олон улсын стандартын зөвлөлөөс 2023 оны 6 дугаар сард одоо Эстони улсын ТБ1 буюу доктортой байдалд хамаарах санхүүгийн мэдээллийн тодруулгын ерөнхий шаардлагууд мөн Эстони улсын одоо ТБ2 уурын султай холбоотой тодруулга гэдэг ингээд тодруулгын стандартуудыг одоо батлан гаргасан. Тэгэхээр энэ дэлхийд дахныг одоо хамарсан суурь стандартууд суурь стандартууд суурь нь болж өгч байна гэж ойлгож байгаа. Тэгээд эдгээр суурь стандартууд нь 2024 оны 1-р сарын 1-ээс хүчин төгөлдөр мөрдөгдөж эхлээд компаниуд одоо доктортой байдалд хамаарах материалын эрсдэл боломжуудыг тайлгнах мөн уур амьсгалтай холбоотой тодруулгыг гаргах ингээд шаардлага бол үүссэн байдаг. За Монгол улс бол доктортой байдлын тайлгын суурь бодлогын орчныг бүрдүүлэх чиглэл тодорхой алхмуудыг бол эхлүүлээд байна. Тэгэхээр бид нэр суурь хэсгийг нь одоо өнөөдрийн энэ хурлаар тавьж байна гэж та бүхэн ойлгож болно. Тэгээд Эстони улсын ТБ1 ТБ2 тодруулгын одоо стандартын албан ёсны Монгол орчуулга бол болон одоо хөрөнгийн бүртгэлтэй компаниуд зориулсан бонзын тайлгналын өдрөмж гарсан зэрэг нь бол институтын түвшинд бол доктортой хөгжиж байгааг бол илтгэж байна гэж бид нар ойлгож байна. Тэгээ одоогийн байдлаар доктортой байдлын тайлгыг дэмжих хууль эрх зүйн шаардлага бол жоохон хязгаарлагдмал. Тэгээд их аж ахуй нэгжүүд доктортой байдлын тайлгныг албан жуулмаар тайлгнах хуулийн үүрэг бол хүлээгаагүй байгаад байгаа. Тэгэхээр энэ хэрэгжилтийг хангах одоо зохицуултын тогтолцоо хөгжлийн шатандаа явж байгаа гэдэг бол та бүхэн ойлгож байгаа. Тэгээ олон улсын туршлагатай харьцуулахад Монгол улс олон улсын стандартыг бол үндэсний онцлогтой нийцүүлэн нотгшуулах шаардлагатай. Тэгээ энэ сайн дурын хэрэгслээс эхлэн бол туршилтын төсөл хэрэгжүүлэх. За тэгээд албан журмаар мөрдүүлэх үе шат бол дараа нь орол гарч ирэх бах. Тэгээ Монгол улс 1993 онд одоо нэгтлэн бод бүртгэлийн тухай хуулийг батлснаас хойш Эстони улсад суурилсан санхүүгийн тайлгналын тогтолцоог одоо тууштай хэрэгжүүлж ирсэн. Тэгээд доктортой байдлын тодруулгын шинэ стандартууд нийцүүлэх чиглэлд бол стратегийн байр сууриа тодорхойлох ингээд шаардлагатай бол өнөөдөр ингээд тулгарсан байж байгаа. Тэгээ Монгол улсад бол аж ахуйн нэгж байгууллагын доктортой байдал болон уур амьсгалтай холбоотой тайлгнылын зохицуултын одоо орчин хөгжлийн шатндаа байгаа гэж та бүхэн бол түрүүнд дурдсан. Тэгээ сүүлийн үед хэд хэдэн санаачлах нь одоо энэ ирээдүйд СТОС-ын одоо ТБ1, ТБ2 тодруулах стандартын төлөв одоо суурийг тавиулахаар за үүн жишээлбэл санхүүгийн тайлгнылын хууль тогтоомж за тэр дотор нь бол Монгол улсын одоо нэгдсэн бол бүртгэлийн тухай хууль 2015 онд одоо шинжилгээний хариулагдаад энэ компани тайлгнылын суурь болж ирж байгаа. За дараагийн суурь нь бол компани зах зээлийн кодекс гэж байдаг. За 2022 онд санхүүгийн зохицуулахаараа бюжид одоо бүртгэлтэй одоо бүх компаниудад зориулсан компани зах зээлийн кодексыг одоо шинжилэн баталсан байдаг. За гуравт нь сайн дурын одоо бонзын тайлгнылын өдөр дэмжиж байгаа. За санхүүгийн зохицуулахаараа Монголын доктортой санхүүгийн холбоотой хамтраад одоо олон улсын санхүүгийн корпорац болон нүүбийн хөгжлийн хөтөлбөрийн дэмжлэгтэйгээр Монгол улсын одоо анхны бонзын тайлгналын бол өдөр дэмжийг 2022 онд ингээд баталсан байдаг. За Монголын хөрөнгийн биржийн бол 2024 оноос ингээд биржид бүртгэлтэй нэгдүгээр ангил бүртгэлтэй ялангуяа компаниудыг жил бүр бонзын мэдээллийг загвар хяналтанд албан ёсоор тайлхнах бол шаардсан байдаг. Тэгээд манай бирж бүртгэлтэй байгаа 163 компани одоо 2-3 дугаар ангил бүртгэлтэй байгаа компаниуд бол энэ тайлгналыг бол сайн дурын үндсэн дээр бол тайлгнахыг ингээд зөвлөсөн байдаг. Тэгээд одоо өнөөдрийн энэ сургалтанд одоо та бүхэн бас хамрагдсанаар доктортой хөгжлийн нөгөө тайлгналын олон улсын стандартуудыг ойлгох стратеги засаглд уялдуулах одоо алхмуудыг сурах, хэрэгжилт, хяналт үр дүнг нь одоо хэмжих аргачлал зэргийг бол практик даалгавартай уялдуулан эзэмшиж байгууллагынхаа одоо доктортой хөгжлийн чадварыг нэмэгдүүлэхэд бол ихэнх хувь нэмэр оруулна гэдэгт бол итгэлтэй байна. Тэгээд энэхүү арга хэмжээ зохион байгуулж байгаа нийт байгууллагууд болон одоо оролцсон биднийг одоо сонсож байгаа та бүхэнд одоо энэ сургалтанд нь амжилт хүсье. Тэгээд цаашдын амжилт нь хөгжил дэвшил сайн сайхан бүхнийг хүсье. Баярлалаа та бүхэнд.
Thank you very much for setting the scene so well for us there, and fantastic to hear about all of the work being done already in the region to adopt and provide guidance to the market on the standards. So many thanks for that opening, much appreciated. Excellent. So we're very pleased also as well today to be joined by Wei Yuan, who is the ESG Operations Officer for the East Asia Pacific region with the IFC team, our partners on this program, IFC being part of the World Bank Group. So many thanks for joining us, Wei, and I'll pass over to you now.
Thank you, Fiona, and good afternoon all from Beijing. As Fiona introduced, my name is Wei Yuan. I'm an ESG Operations Officer with IFC's Asia ESG Advisory. It's a great pleasure and privilege to meet with all for this important session on the IFRS Sustainability Disclosure Standards. I want to just quickly share from two perspectives. One is there has been a lot of momentum for global partnership for capacity building, especially across the emerging market on ISSB standards. I think today's session is a great example of that. Today's training is really a result of a global partnership formed between IFC, our global team, the UNSSE, and IFRS Foundation. So I understand there is a series of similar trainings rolled out across different countries, all aimed at strengthening sustainable capital markets by enhancing sustainability and climate reporting in emerging markets and developing economies. For IFC, this is a very important topic. We see the stronger capital market and sustainability reporting will allow international investors to have confidence in the local capital market and channel financing. And the second aspect, I'm a regionally based staff, and over the past few years, I've been working with our office in Mongolia, in Ulaanbaatar, closely on market level capacity building programs aimed at supporting Mongolia in green finance. I was very glad to hear from MSME talking about IFC support. We actually had the pleasure of working with international development partners, including UNDP, to support IFRC and MSE to introduce environmental and social governance and sustainability reporting guidance for Mongolia companies in 2022. And also last year in November, together with the FRC and MSAE again, and I believe also with the support of MSFA, we organized a round of training on the ESG and sustainability reporting guidance for listed companies in Mongolia. And at the time, knowing that IFRS S1 and S2 is coming, we specifically included a bit of an introduction on the IFRS S1, S2, just for kind of a bridging foundation. But of course, today's session is more comprehensive, in-depth. Last year, I think we aimed to give a bit of a flavor on what's coming. And then looking forward, I also want to quickly mention in mid this year, IFC and IFRC signed a memorandum of understanding, MOU, to jointly promote two things, basically innovative thematic financial instruments in Mongolia's capital market, and also supporting the ESG reporting framework updating to align with IFRS S1 and S2. So I was also really happy to hear from the MSE representative talking about a potential need from the market for a bit of a regulatory push and a drive. Hopefully, we will be working closely with other development partners to support that initiative. So just to wrap up, I think Mongolia's move to IFRS-based sustainability standards is really a very important step. It will position its capital market for greater transparency, comparability, and investor confidence. And this allows Mongolia to align with global ESG disclosure trends and also overall support the nation's sustainable finance growth. I want to end by a bit of advertisement also about IFC's tools available to support listed companies. If you want to kind of learn from what other private sector companies doing, is the IFC Beyond the Balance Sheet platform. That's a website. You can search, just type IFC Beyond the Balance Sheet. And then that's a valuable global resources IFC has put in a lot of time to build. You can find a lot of training materials and offers a one step-by-step toolkit for preparing reports that align with IFRS and other global standards. And then the resources available on this website are also designed to make sustainable finance accessible, practical, aligned with global frameworks. With that, I want to thank you, NSSE, for organizing this great session, and I hope you enjoy your learning today. Thank you.
Thank you so much, Wei. Great to hear about all the support that IFC is providing in the region, and highly recommend for participants to check out the Beyond the Balance Sheet materials. I've just shared the link in the chat to that as well. Thank you so much. Okay, and so last but by no means least, of course, I'm very pleased to introduce our final opening speaker. Apologies, I think there might be a typo on that slide, but it's Delganaran Tumutogu. So thank you very much for joining us, and I'll hand over to you now from the UNDP team.
Thank you, Faima. So most of this is our Mongolian term. May I speak in Mongolian? За та бүхэнд өнөөдрийн тодорхой байдлын тайлбартай холбоотой стандартуудын талаархын хэлцүүлгийг зүйлд оролцож байгаа та бүхэнд энэ өдрийн мэндийг хүргэе. За би өмнөх хоёр хэлтгэгчтэй давхцуулахгүйгээр товчхон нэгдсэн үндэсний байгууллагын хөгжлийн хөтөлбөрөөс хийж байгаа хэрэгжүүлж байгаа ажлуудын талаар болон энэ стандартын ач холбогдлын талаар товчхон мэдээллийг та бүхэнд өгье. За ер нь бол бид нэр энэ доктортой байдлын санхүүгийн тодорхойлолтын стандартуудыг ярьж байгаа нь бол маш цаг үе болсон зүйл боллоо гэж одоо онцлон тэмдэглэх гэсэн. За учир юу вэ гэхээр Монгол Улсын засгийн газар 2025 дугаар амжилттай өөрчлөлтийн тухай хуулийн төслөө боловсруулж байна. Утгагүй байгууллагын яамны мэдээллээр бол утгагүй одоо эрх жил улсын хурал дөрвөн мархаар хэлцүүлэхээр төлөвлөж байгаа. Тэгэхээр энэ бол маш чухал зүйл байгаа. За дээр нь дугаар амжилттай өөрчлөлтөнд оруулах үндэсний тодорхойлсон хувь нэмрийн зорилтоо Монгол улс ахиулж 2035 онд төлөмжийн ялгаруулалтыг 30%-аар бууруулахын маш томоохон зорилтыг бол татсан байгаа. За энэ зорилтуудыг хангахад бол урьдчилсан тооцоололоор бол 14 тэрбум доллар шаардлагатай гэдэг ийм тооцооллыг гаргасан. За энэ 14 тэрбум долларыг бол мэдээж дан ганц засгийн газар, олон улсын хөтөлбөр, донор байгууллагын нэмэлтээр хэрэгжүүлэх боломжгүй. Энэ дээр бол хувийн компаниудын оролцоо бол маш чухал зүйл байгаа. За тийм учраас Монгол улсын одоо хувийн хвшилүүд энэ чиглэлийн санхүүжилтийг гадна дотноос санхүүжилтийг босгоход мэдээж олон улсын санхүүжүүлэгч байгууллагуудын шаардлагыг бол зүйсээр хангах шаардлагатай. За түнчлэн Монгол улс биологийн олон янз байдлын төлөвлөгөөгөө боловсруулж дуудахгүй баталгаар ажиллаж байна. За хүний эрхийг хангах төлөвлөгөө стратеги бас боловсруулж байна. За эдгээр байгаль орчин, нийгэм засаглалын энэ одоо эрсдлүүдийг зөв удирдах, эрсдэл боломжийг зөв үнэлж тооцоолох нь бол маш чухал байгаа. Эдгээр зүйлүүдийг бол одоо та бүхэн мэдж байгаа санхүүжүүлэгч байгууллагууд, олон улсын санхүүгийн байгууллагууд зах зээлээс бол уур амьсгалын өөрчлөлт, байгаль орчин, нийгэм засаглалын аливаа эрсдлээ бол зөв үнэлж, эрсдэл боломжуудаа зөв үнэлж тэдгээрийг зөв удирдах шаардлагыг бол тавьдаг. Тэгэхээр энэ стандарт бол маш чухал цаг үе олсон юм зүйл юм а гэж бидний зүгээс бол үзэж байна. За тэгээд эдгээр стандартуудыг нэвтрүүлснээр бол хувийн хвшил бол илүү одоо гадны дотны томоохон зах зээлүүд санхүүжүүлэх байгууллагууд нэвтрэх санхүүжлэх бол боломж өртнө гэж харж байгаа. За энэ хүрээнд бид нэгдсэн үндэсний байгууллагын хөгжлийн хэлбэрээс түрүүний дурдсан 2022 онд олон улсын санхүүгийн корпорац болон бусад байгууллагуудтай хамтарч бид нэр санхүүгийн зөвшөөрлөх хөрөнгөний биржийн одоо ESG репортингийн гарын авлага өдөрдмжийг боловсруулах дэмжлэг үзүүлсэн. За энэ ажлыг үргэлжлүүлж болж нэгдсэн үндэсний байгууллагын хөгжлийн хөтөлбөр энэ жилээс эхлэж Европын холбооны санхүүжилттэйгээр тогтвортой хөгжил ба зах зээлийн зохицуулалтыг уялдаг хангахад дэмжлэг үзүүлэх хөтөлбөрийг бол глобал хөтөлбөрийг бол хэрэгжүүлж байгаа. За энэ хүрээнд бид нар Монгол улсын хувьд тогтвортой байдлын санхүүгийн тодорхойлгын S1, S2 стандартуудыг нэвтрүүлэхэд дэмжлэг үзүүлэн ажиллаж байна. За бид бүхэн сангийн яам, санхүүгийн зөвшөөрлөх хороо, Монголын хөрөнгөний бирж болон бусад байгууллагуудтай хамтран түрүүний дурдсан S1, S2-ыг нэвтрүүлэхэд бэлэн байдлын үнэлгээг бол компаниудын дунд судалгааг хийлээ. Бэлэн байдал нь хангагдсан байна уу, хангагдаагүй байна уу? За хангагдаагүй бол ямар асуудлууд байна? Тоо мэдээллийн хувьд гарч болж байна уу? Гарах боломжгүй байна уу гэдэг дээр чадах нь байна уугүй гэдэг дээр ийм олон хэмжээст байдлаар бид нэр бэлэн байдлыг үнэллээ. За энэ бэлэн байдлын үнэлгээнд дээр тулгуурлаад зохицуулагч байгууллагуудад энэ стандартуудыг нэвтрүүлэх зохицуулалтын замын зургийг нь бол боловсрууллаа. Ингээд энэ стандартуудыг үе шаттайгаар компани бүрийн хэмжээ болон үйл ажиллагааны цар хураанаас хамаарч хэрхэн оновчтойгоор үе шаттайгаар нэвтрүүлэх вэ гэдэг дээр бол замын зургийг нь боловсруулан олон талуудтай хэлцүүлгүүдийг бол өнгөрсөн саруудад энэ олон талт хэлцүүлгүүдийг бол маш үр дүнтэй хийж хэлцүүлээд явж байна. За ингээд энэ замын зураг маань удахгүй холбогдох байгууллагууд ялангуяа аудит стандартын хороогоор сангийн яамны дэрэгдэх хороогоор бол хэлцүүлж батлуулах хаа гэсэн ийм хүлээлттэйгээр бол бид нар бол ажиллаж байна. Гэт өнөөдрийн хэлцүүлгээр та бүхэн өнөөдрийн хэлцүүлэгт оролцох олон улсын мэргэжлүүдээс холбогдох мэдээллүүдээ туршлага солилцох боломж бүрдэж байгаа. Энэ боломжийг та бүхэн бас идэвхтэй сайн ашиглаарай гэж та бүхнийг хүсэж байна. За ингээд энэ хэлцүүлгийг хамтран зохион байгуулж байгаа Монгол улсын хөрөнгөний бирж, Европын холбоо, олон улсын санхүүгийн корпорац, нэгдсэн үндэсний байгууллагын тогтвортой хөрөнгөний биржийн санаачлаг, тогтвортой санхүүжилтийн холбоо, олон улсын санхүүгийн тайлгын стандартын байгууллагын экспертүүд, сурагч багш нарт бол талархснаа илэрхийлье. За тэгээд энэ үгээр энэ өнөөдрийн хэлцүүлгийг та бүхэн амжилт хүсье. Анхаарал тавьсан баярлалаа.
Brilliant. Thank you so much, Delganaran. Really appreciate you setting the scene for us so well there, and fantastic as well to hear of all the support that UNDP is providing to organizations in the region. Excellent. Thank you, everyone, for setting the scene so well with those openings. So I'll cover now a few practical points before we get started with the session content. So firstly, just to mention a few housekeeping points. Probably the most important one, as I've seen a few questions asked about this, is just to confirm how to access the interpretation options that you have available to you. So in the bottom bar of Zoom, you should have a channel called interpretation. Within that, you can select whether you want to listen in the original audio, so that will just be whoever's speaking at the time, but from now on, the session will be in English. And you can also switch then between English and Mongolian, which our interpreter Basra is kindly supporting us. So please use that interpretation option if you'd like to select the interpretation in Mongolian. And I'll just ask my colleague Lois to please reshare the chat message about that as well. Otherwise, just to mention as well, you'll notice as participants that you are muted in the session, but that doesn't mean that we don't want you to participate and engage with us. So please make use of the chat, as you're already doing, to share any general comments. However, if you have particular questions for the team, please make sure you place your questions into the Q&A box, because that allows us to track and respond directly to your questions as well. In terms of the format today, we have a live 3.5 hour session. As I've mentioned, please do ask your questions throughout and we'll respond to those in writing. We'd love your participation in the session as well, so please make sure to use the interaction options we'll be using, including the polls and Mentimeter. And finally, you'll be able to receive a certificate for taking part in today's training. To receive your certificate, you'll need to fill out the survey that we'll share with you at the end of the training session. So just to introduce who's going to be delivering the training today, my name is Fiona from the UN SSE team, and I'm joined by my colleague today, Lois Guthrie. Alongside us as well, we're joined by our colleagues from the IFRS capacity building team, Robert Swiatowski and Bella Cheng. So thanks to both for joining us as well. And you'll hear from all of us throughout different parts of today's session. So to cover quickly what the learning objectives are from our training, firstly, our main objective is to understand the ISSB standards. Secondly, to understand how you can use the ISSB standards and apply them. And finally, to identify the steps that you can take to develop a disclosure plan to apply and put into practice the standards. And so to support us in achieving those three objectives, we've developed the structure that you'll see in that circle diagram at the moment of 4 modules. So we'll start with Prepare, which is all around building on existing knowledge of sustainability reporting and setting out the case for why to report. Secondly, we'll move into Align, so thinking about the global baseline that the IFRS S1 and S2 standards have set. In Implement, we'll then focus on identifying, evaluating, and integrating sustainability risks and opportunities through internal practices and systems. And finally, in Communicate, we'll look at the location and timing of reporting and consider reporting efficiency as well. I'm just seeing a few chat messages about the audio. For anyone who is struggling with the access, please make sure to look at the interpretation bar at the bottom of the screen, and that will give you your audio channel settings. If you are having an issue viewing those, perhaps try leaving and rejoining the webinar just to see if that resolves it for you. But I believe for most people the audio is fine, but do let us know if there's a bigger problem. So in terms of our agenda for today, this is how the different modules break down across the time that we have in the session together, and we will take a short 5-minute break in the middle of the session as well. So the materials that we'll be using for today's training session are all available for you to access online. So if you go to the event webpage that my colleague Lois will share the link to in the chat, on that page within resources, you can download and access the slide presentation that we'll be using today, as well as the homework assignment that we'll mention to you later as well. We'll also share the recording of today's session to the same page after the training. And as I've mentioned, another activity that you optionally have available is a homework assignment. So this is not mandatory to complete, but to help you continue your learning after the training, a homework assignment is available to download from the page that Lois has shared the link to in the chat. And that is really designed to help you to continue your learning internally and to develop your organization's disclosure plan to apply the IFRS standards. I'll very quickly as well mention the UNSSE toolkit of resources that's available to access from the UNSSE website to support you further on this topic. And again, you can access that by following the link in the slide presentation. Okay, so to get us started, we have a quick Menti exercise to do together to get started for the session. So to access Menti, my colleague Lois will share the link in the chat with you that will take you through to our first question today. And that's to get a response from you all about why you've joined us in today's training and how much you already know. So if you follow that link that Lois has just shared with you, that will take you through to this question in Menti. What I will do now as well is I'll share my screen, which provides another opportunity to join us as well. So as I've said, the easiest option is to use that link that Lois has shared, but you can also access Menti using the QR code that's visible on the screen currently. And finally, by going to menti.com and entering the 8-number code visible at the top of the screen in that dark box. But the first question, just to get us started, is just to get a sense from everyone on why you've joined us today, maybe what your hope is for something you'll get out of the session or what you're most interested in learning about. Great, thank you everyone who's responded so far. So I see knowledge, sustainability reporting, better understanding, enhancing your competencies, thinking about alignment, a job requirement. Okay, maybe someone made you come today, but I I hope that you can still benefit and use this session to help you implement what you have to do in your job. And I see saving the world is a nice aim. So let's see if we can do that. Great, thank you everyone. And then a second quick question is just to get a sense of what your current knowledge and understanding of the IFRS standards is. So you can use the sliding scale available to you there to let us know from the left-hand side, maybe very new or not that comfortable at the moment with these areas. And on the right-hand side, maybe you're already quite experienced and you have some knowledge already. And the different areas would be to explain to your team and colleagues what the ISSB is, to use the ISSB standards, and to develop a sustainability reporting strategy. So thanks for voting there to let us know. Always good to get an understanding of where you're currently understanding, what your current understanding is. Great. So I see from those who've responded predominantly, we're somewhere in the sort of middle to lower comfort at the moment, so no problem at all. And of course, we're here today to help build that knowledge and understanding, so you're in the right place. Great, thanks everyone. So if you can keep that Menti tab open in the background, that will be helpful because we'll use Menti again later in the session, but we'll reshare the link as well when we do so. But moving in now to the training content itself, I'll get us started with a little bit of an overview on our first module. So a quick disclaimer just to share before we get started, which is just to be clear how we're using examples in today's training. These are really here just to add some color to what we're talking about. We know that sometimes a real example can help you put into practice what we're discussing. But you shouldn't necessarily see these examples as the right or the best way to do this. Of course, each organization has to approach this in their own unique way. Okay, so with that established, we'll get started now on Module 1, which is all around building that solid foundation of knowledge. And so within this unit, we like to think about 3 key areas. So purpose, so why do we do sustainability reporting? Landscape, how has the reporting landscape evolved and become simplified? And finally, introduce the global baseline. So that's the core concepts and requirements of the IFRS S1 and S2 standards. So to get us started on the why aspect, we're going to be looking at the case and market drivers for reporting. So a quick Zoom poll just to get us started here and get a sense from everyone as to what your reasons for focusing on sustainability reporting are. So here's a couple of different options for you. So let us know which of these reasons apply to you and why you might be interested or already getting started with sustainability reporting. So maybe regulation, maybe sharing your own organization's approach and your management objectives, maybe peer pressure, so the social or competitor expectations to report alongside other companies. Perhaps your investors are requesting this information. Maybe you have other reasons as well, so please share those in the chat. Or perhaps you're just getting started and you're not yet sure whether you'll report or what you want to report about, so that's fine as well. Great, I'll give everyone a few more seconds to vote on the poll, and then we'll show you the results. Okay, so I'll end the poll there and share those results with you. So just over half of you have indicated regulatory requirements and investor interest as your top reasons here. And then some of you as well indicating that sharing your management's objectives or maybe the peer pressure to report alongside other companies. So a little bit of a mix, but overall looks like regulation and investor interest are the top drivers. So thanks for sharing that, everyone. So just diving into that in a little bit of detail, investor interest was something that many of you mentioned as a driver there. And indeed, we do see that to be the case across many markets globally. The data that we're showing here is the number of signatories we have to the UN Principles for Responsible Investment, showing that in the past 5 years or so, we've seen a big growth overall in the number of investors that are focusing on these types of issues. So why is it that investors are interested in this topic? What I think is most important to highlight here is that the key driver for this demand from investors is the financial effects of sustainability issues. So in this study that we're summarizing on the screen of individual investors, it was shown that the top interest reason or reason they were interested in sustainability was because of the relevance of sustainable factors for financial performance. And so it's important to remember today that our focus is on disclosing financially material sustainability information. And so we'll talk more about materiality later, but just to explain a little bit about the types of financial effect that investors are interested in. So firstly, we have effects on a company's financial performance. So this will show up in a company's revenue statement or profit or loss statement. And we can see as a result of sustainability issues that there are opportunities or potential for there to be changes in the revenue of a company. For example, if there are disruptions to its operations from sustainability issues, or maybe opportunities to develop new products and services as well. There can also be changes in expenditure. For example, if there are increased costs relating to sustainability, or also potentially there could be needs to invest in new technologies to capitalize on sustainability opportunities as well. And the second thing you'll hear us talk about today is effects on a company's financial position. So the two main ways that this can play out will be in changes to a company's assets or liabilities. For example, if we see that assets need to be repriced as a result of sustainability issues. And secondly, as well, there could be changes to the financing and cost of capital. For example, if we have increases in insurance premiums as a result of climate risks. And a few other key concepts just to highlight in our introduction relate to sustainability, risks, and opportunity. And so what we'd like to highlight on this slide, which shows you the data on key global risks from the World Economic Forum's annual report, is that there can be a big difference between the risks that are most important in the short term and those that may become more material in the longer term. And indeed, if we have to prepare now for a risk that we see maybe 5 or 10 years from now, it could be that we have to invest today to manage that risk or capitalize on the opportunity. And that could mean that those financial effects that we were talking about could occur much sooner. And finally, another key thing to highlight here is that these risks are all very interconnected across sustainability topics. So this visual here from the same report highlights all of the different types of risks and the different connections between them. So when we're thinking about reporting here, although we might have separate topic standards, of course, as much as we're able to, we need to think about how these issues connect with each other as well. Okay, so fantastic. With that, brings us to the end of our purpose module, and I'm going to pass over to Lois now, who will talk us through the reporting landscape.
Yes, hello everybody, and we've talked so far about why sustainability disclosure is important. We're now going to look at how sustainability reporting standards have evolved within the landscape. Before we do so, we'd like to ask you what frameworks you are currently using for sustainability disclosure. So if you would like to look at the Zoom poll, you can select as many as you want to. And the question is, what frameworks are you currently using to disclose? Are you reporting using the Global Reporting Initiative standards, the Integrated Reporting Framework, the Sustainability Accounting Standards Board standards, the recommendations of the Task Force on Climate-Related Financial Disclosure, the European Sustainability Reporting Standards or other regional standards, or if it's anything else, please tell us in the chat. Already someone's using ISSB, that's great. Or perhaps you're not using any yet. Two people already using, oh, 3 using ISSB, that's good to hear. Let me share the results of the poll with you now. You can see there's quite a spread. About the 35% of you still not using any frameworks yet. That's fine. That's why you're here for the training. 30% using GRI and a mix across the other frameworks that we've mentioned. So thank you for sharing that. That's useful to know. Let's go on now to look at the IFRS Foundation, which is the organisation that has developed the standards that we are talking about today. The IFRS Foundation is a not-for-profit public interest organisation that was established to develop high-quality, understandable, enforceable and globally accepted accounting and sustainability disclosure standards. At the bottom of the screen, you can see that there are 2 independent standard setting boards. The International Accounting Standards Board was formed in 2001. It develops financial reporting standards, and they are in place in over 140 jurisdictions around the world. The sister standard setting board is the International Sustainability Standards Board, formed in 2021, and it released its first 2 standards, the ones we'll be talking about today, in 2023. Because they're both in the IFRS Foundation, the 2 standard setting boards work closely together to ensure that financial and sustainability standards complement each other. These standard setting boards are governed by trustees who are in turn accountable to a monitoring board of public authorities. So how did the standards come to be? Well, you may recognize some or all of the logos on this screen, and they represent organizations that have contributed to the evolution of sustainability reporting. They have a lot in common, but sometimes their objectives are different, the wording they use is different, and their guidelines differ. But most of the organizations on the screen are there to serve the information needs of investors, except GRI that supports a broader range of stakeholder information needs. Now you'll notice that there are arrows on this screen all pointing to IFRS sustainability, and that is because this is a picture of harmonization and simplification. So there are 3 organizations, the Climate Disclosure Standards Board, Integrated Reporting Council and SASB, that have already been consolidated into and form part of the IFRS Foundation. The TCFD, the Task Force on Climate-Related Financial Disclosures, has finished its work, and its work has now been taken over by the IFRS Foundation, and actually the TCFD's work forms the basis of the standards, and the architecture of the standards is based on the TCFD's work. CDP has aligned its climate questionnaire with IFRS S2 on climate reporting, and the IFRS Foundation has taken over responsibility for the disclosure-specific materials of the Transition Plan Task Force. GRI has a memorandum of understanding with the IFRS Foundation, and the 2 organizations are committed to jointly identify and align disclosures. So a picture of harmonization and simplification. Let's see what this means then by asking this question via Zoom. You can only select one answer. Companies that disclose using the TCFD recommendations automatically comply with the ISSB standards. Is this true or false? A few more minutes just a few more seconds to think about this. Let me end the poll and share the results with you. Well, good news, you're correct. It's false. And I'll explain why in a moment, but congratulations, many audiences we speak with don't get this right, but you have got it right. So let me explain why this is right. I did say that the TCFD's work has been incorporated into the IFRS Foundation, but it doesn't automatically follow that if you use the TCFD recommendations, you conform with the IFRS standards. The reason for this is there are 3 things really. The S2 standard uses different wording to capture the same information, so it's just a word difference. Secondly, sometimes S2 requires more detailed information, so that might be information about the way in which companies use carbon credits to satisfy their greenhouse gas emissions reduction targets. Or thirdly, there can be some additional requirements and guidance. For example, S2 requires companies to consider sector-specific disclosures, which we will explain later. So 3 main differences. If you need to know more, there is a comparison document that you can access via the handout. So going back to the IFRS Foundation and the ISSB's work, the ISSB's main objective was to set a global baseline for sustainability reporting, and that global baseline sets a common language for sustainability information, and it enables comparable and consistent sustainability disclosures across global capital markets. So the global baseline is the standards. The standards represent that global baseline and common language. However, there's some sorts of information that companies might want to report in addition to what we see in the standards, and therefore the disclosure system allows for additional building blocks of information to be reported in addition to the building to the standards, what's in the standards. So taking this building block approach reduces the need to duplicate information because you have a globally consistent baseline of disclosures while still allowing companies to report additional information based on standards like the GRI standards so that information is reported to a wider stakeholder group. There's been global backing for the global baseline approach, which is reflected in the ISSB standards that were issued in 2023. The International Organization of Securities Commissions has endorsed the ISSB standards and asked its 130 members to consider how they can incorporate the standards into their regulatory frameworks. There's also backing from the audit professionals and standard setters, including the International Auditing and Assurance Standards Board, and you'll see a link there in the middle of the screen to the new ISSA 5000, which is an assurance standard for sustainability information. There, the IFRS Foundation has a regulatory implementation program whereby it supports jurisdictions that are planning and preparing for voluntary and mandatory adoption of the standards. And of course, they're also working to support voluntary adoption of the standards. So with that introduction to the IFRS Foundation and its work, I'm going to hand over to our colleague Bella from the IFRS Foundation, who's going to start explaining the standards to us.
Thank you so much, Lois. So now we've talked about the business case and the market case for sustainability reporting, the evolution of the landscape, and how it is being simplified and rationalized. Now let's introduce IFRS S1 and S2. As we start, it's important to note that there are some key terms that should be understood. You can find the definitions in your handout, but I wanted to briefly mention them here. First of all, we will be saying the phrase sustainability-related financial information quite a lot. This can refer to a broad set of issues, including climate, nature, or biodiversity, human, social, or others. And sustainability-related financial information is the information about a company's sustainability-related risks and opportunities that is useful to investors in making decisions about providing resources to the company. And in terms of sustainability-related risks and opportunities, those are that could reasonably be expected to affect the company's cash flows, access to finance, or cost of capital. It could affect the company's prospects. And also, we will refer to general purpose financial reports, which includes a company's financial statements and management commentary. You might know this as a management report, management review, or strategic report. Some regulators require specific disclosures in certain parts of general purpose financial reports, so we use this generic phrase throughout. Okay, so for the core content areas, anyone familiar with TCFD will recognize the same 4 core pillars or content areas for the SSB standards. These are governance, strategy, risk management, and the metrics and targets. For each core content area, there are a set of key disclosures to be addressed, and the standards provide very detailed guidance on these requirements. We will discuss each of the 4 content areas today, but I encourage you to download the standards as part of your homework assignment. Okay, now let's start with IFRS S1. I'll give it its full title, General Requirements for Disclosure of Sustainability-Related Financial Information. IFRS S1 sets out general requirements for the content and the presentation of sustainability-related risks and opportunities. If you are familiar with TCFD, you will see the same architecture applied throughout the standards. And also S1 asks preparers to refer to and consider the applicable of the SASB standards and other sources of further guidance to identify sustainability-related risks and opportunities, and also identify material information. The SASB standards are organized by industry, enabling a company to identify disclosure topics and metrics applicable to its business model and operations. And finally, the standards can be used in conjunction with any accounting requirements, not just the IFRS accounting standards. Okay, the scope of S1 is all sustainability topics except for climate, which is covered by S2. The second standard, S2, focuses on climate disclosures, building on the same foundations of S1. For example, it fully incorporates the recommendations of TCFD, and also it sets out the requirements for a company to disclose material information about its climate-related risks and opportunities. And also it requires the disclosure of both cross-industry and industry-specific information. In terms of climate-related risks, these include both physical and transition risk, which we will come back to later. Other specific climate-related disclosures are required, for example, on scenario analysis and GHG emissions. And also preparers must refer to and consider the applicability of the industry-based guidance on implementing IFRS S2. As we've said already, this is organized by industry, enabling a company to identify climate-related disclosure topics and metrics applicable to its business model and operations. Okay, so a very important point is S1 and S2 are not standalone standards. They are a package and must be applied together. Even when the company is reporting only on climate-related risks and opportunities, the company must apply both IFRS S1 and S2. This is because IFRS S1 sets out general requirements or parameters for the type of information that needs to be provided in order to be decision useful for investors. S1 also explains the concept of materiality and how companies identify material sustainability-related financial information. Okay, next, let's consider some of the conceptual foundations that underpin the SSB standards, which might be new to anyone without an accounting background. These concepts help us to understand how best to disclose information in order to meet the requirements of the SSB standards. To start with, companies must fairly present a complete set of sustainability-related risks and opportunities. Fair presentation also requires disclosures to be faithfully represented. To achieve this, companies shall provide a complete, neutral, and accurate depiction of sustainability-related risks and opportunities. The reporting entity concept requires the organizational boundary for sustainability-related financial disclosures and financial statements to be the same. Another important concept is connected information. We saw earlier when Fiona explained how different risks are often interconnected. The SSB standards require companies to clearly identify key connections, such as those between risks and opportunities, connections between the four content areas, and connections between sustainability-related financial disclosures and the main financial statements. Okay, so after introducing so much about SSB standards, so let's look at an example. Over to you, Lois.
Thank you, Bella. And because this is our first example today, I just want to remind you of the disclaimer that Fiona gave earlier, that we use examples to inspire you and to illustrate certain points. They're not designed to be regarded as best practice examples, just for your information and inspiration. So this first example is to illustrate the point that Bella just made about the standards requiring information to be connected. This is an extract from BHP's annual report 2024, and BHP is a global mining company. What they're telling us about is the impact of climate-related risk on their business, their strategy, and their capital alignment and allocation. So they tell us that they have conducted climate-related risk assessments over different time horizons, and they have conducted scenario analysis. The results of these have been integrated and connected into their strategy, but also treated as a sensitivity in their capital allocation process. So they're connecting the business strategy, the climate risks, and the scenario analysis results with their capital allocation, and also with what they understand about the rapidly decarbonizing global economy. In the second paragraph, they tell us that they're still undertaking some studies on physical climate-related risk, but when they have the results of that, they're going to use them to connect with studies on their risk profile and their risk management activities, amongst other things. It will also inform their corporate planning and identify areas where they should focus their assessment of new or strengthened controls or adaptation methods. So they're connecting things about climate with their normal business activities. In the light grey text at the bottom, they give us links to where we can find further information on the impacts of climate-related risk on operational activities, greenhouse gas emissions across the value chain, on their financial statements as well. So they connect us in the light grey text to further information. So that was an illustration of connected information, and I'm going to hand back to Bella now.
Thank you, Lois. Okay, so let's continue with Zoom poll. Yeah, what information should be considered for connected information? Yeah, this is a multiple choice questions, and select all that apply. Okay, just wait for a few more seconds. Okay. Okay, so I'm going to end the Zoom poll now and share the results with all of you. Yes, okay, congratulations. I think most of you have chosen the correct answers. Well, the correct answers is all are correct, and you remember that I mentioned 3 aspects regarding connections. Those are connections between sustainability risks, related risks and opportunities, and the 4 content areas, and also the sustainability related financial disclosures and financial statements. Okay, so now let's continue with materiality. The standards are built on the concept of materiality as defined by the IFRS Foundation. We are going to go into this in more detail later, but just to highlight that we will be referring today to material information, which is information that if omitted, misstated, or obscured could reasonably be expected to affect investor decision making. And during the SSB consultation on the exposure drafts, one of the key feedback topics was the importance of supporting preparers, particularly those with more limited resources and those in emerging markets. In addition to the standards and the application guidance published in 2023, a number of education resources were also published, and since then others have followed, including the IFRS Knowledge Hub. We are also in the process of gathering examples and case studies provided by our partners. And the SASB standards were aligned with IFRS S2 to help preparers seeking industry-based guidance, and the FSA credential was also updated with more planned to come. I should also note that the IFRS Foundation's capacity building program, which was launched at COP27, is a key part of our support to preparers, and the SSE training initiative is one of our most important deliverables. Okay, so it's time for another Zoom poll. Yeah, the question is, water is a vital input to our business, but the SSB standards do not currently have a specific standard on water. What do you do? The first choice is do not disclose anything about water. The second is consult the sources of guidance listed by SSB. The third one is engage a consultancy to help. And the last one is copy your competitors' reporting. Okay, just maybe 5 more seconds to get more participation. Okay, so I'm now going to end the poll and share the results. Also, first, the correct answer is option B, which is consult the sources of guidance listed by the SSB as required by the IFRS S1. Well, for the option A, do not disclose anything about water. Well, I think most of you have done correctly. Option A is obviously incorrect because water is a vital input to your business, which means water-related information should be probably your material information. And also, in terms of option C and option D, well, I think some of you may also think that they are helpful, but for this question, the only correct answer is option B. Okay. So I'm going to hand over to Fiona for the module 1 summary.
Great, thank you so much for that, Bella. And as you say, that brings us to the end of our first module. So before we wrap up, let's take a few minutes just to review what we've covered. So firstly, we reviewed the purpose of sustainability-related disclosures. And a key takeaway that we hope that you leave this workshop with is that there are important benefits, both internally and externally, for collecting and disclosing sustainability-related financial information. So ultimately, if you're not aiming to make good use of that data that you're collecting to improve your strategic decision-making, you're missing an opportunity. Also, if you have operations in high-impact sectors with high-risk exposure, your competitors could already be disclosing those risks and identifying opportunities as well. And that's going to leave your investors wondering why you're lagging behind and not disclosing and managing those issues. Next, we then looked at the evolution of disclosure standards and the formation of the ISSB with the aim to simplify the reporting landscape. And when you're thinking about other voluntary disclosures, you shouldn't see those as competing with the ISSB standards, but rather building on top of them. And finally, we introduced the standards and the important concepts that you need to understand in order to use them correctly. And a key point I want to reiterate here is that these standards and the guidance that come with them are designed to meet the needs of investors. And so they're heavily focused on those prospects that we discussed at the start of the unit relating to effects on financial performance and position. Okay, so to summarize this module, we'll now have a quick exercise together in Menti. And our first exercise will ask you to reflect on what the objectives are for your sustainability disclosures. So we've heard already about a number of possible different drivers that you may have for reporting. But we think when you're developing your organization's own disclosure plan, it's important to set yourself a clear goal and be clear on what you're trying to achieve with your sustainability disclosures. This is then something that you can use to build collective understanding with your colleagues and leadership team about what you're trying to achieve. So when setting your objectives, you'll want to consider what the reporting requirements are that you're seeking to meet. So for example, which standards you're seeking to align to. And you'll also want to think about where you are now. So what is the degree of change that's going to be needed to move from your current processes and disclosures to the desired position in the future? It might be that you just have a few small changes to make, or it might be that you need to do quite a big change. So understanding the level of change and ambition is kind of an important part of setting objectives as well. So it would be great to get your responses and reflections on that question. So I've shared in the chat again the link to access the Menti slide, and I'll just share my screen with you now as well. So as a quick reminder, you can also go to menti.com and enter that code at the top of the screen if you need to access Menti, but the link in the chat is there as well. And thanks to those of you who've already shared your responses here. So here are your answers on your objectives from sustainability reporting. So I see aligning with global standards, meeting investor requirements and being clear about your investment strategy, giving useful information, not only figures and traditional reporting. So it's a good point. Try and keep things useful for your audience. Promoting the company better and building trust with investors. Thinking about how to track and respond with your metrics as well, I see there. Someone's mentioned starting sustainability disclosures in our annual report according to the ISSB standards by 2027. So that's good there to be clear about what standard you're seeking to align with and your timeframes as well. So demonstrating your commitment to responsible business, I see. I see several more mentions of investors. And I see some mentions here as well of avoiding risks and benefiting from opportunities related to the Sustainable Development Goals as well. So a good point as well that, you know, risk and opportunity management is a key part of all of this. Great. Someone's mentioned also maybe reducing their carbon footprint as well. Great. Attracting investment again is mentioned, meeting investor requirements, maybe thinking about other stakeholders. I see some mentions of here as well. So maybe thinking about what you report to them too. Identifying material risks and opportunities so that you can manage them to minimize loss and create value. So great, yes, that's really highlighting integration of these issues into your strategy. And providing sufficient information to the users of financial statements. So I think sufficient is an interesting and a salient word there, because of course you might argue that investors should already have this kinds of information, but indeed it is important to make sure we're disclosing to our investors on those risks and opportunities already if we have them. So thinking of this as part of your business as usual activities to report to your investors is a good point. Lovely. Thank you, everyone, for all of these responses. This is great to see. So I'll leave these available for you to view. I see some similarities in themes, but hopefully useful just to reflect there as we finish that first module on what your ambitions for this topic are. Brilliant. Thanks, everyone. So I will now reshare the slide presentation and we'll be getting started on our second module, which Bella's going to kick us off with. So thanks, Bella.
Thank you, Fiona. Okay. Now that we have introduced the initial concepts, let's dive into how to apply the SSB standards, taking into account additional disclosures, including any relevant geographical or sectorial requirements, as well as peer practices and your leadership's objectives. Okay. In order to understand how to ensure your disclosures meet global standards, we will look at two key concepts in this unit. The first and main focus of this unit will be on how to apply the standards to achieve a global baseline for disclosure. And once we cover that, we will also discuss how additional disclosures fit. Okay, to begin, let's focus first on how to apply the SSB standards as the global baseline. Okay, so let's get started on the first core content, governance. This includes aspects that relate to the governance body in your company and how management is applied. Okay. For each of the core content areas, we will discuss questions that you could ask in your company to start identifying the information that will support some of the disclosure requirements, for example, as part of a gap analysis. So if we look at the governance and the management requirements, we can see that there are several that are fairly qualitative. For example, which bodies are responsible for the oversight and management of processes, controls, and the procedures of sustainability-related risks and opportunities. And is management responsibility delegated to a specific role or committee? And also can ask how and when do they get informed about sustainability-related risks and opportunities, how these issues inform strategy, decision-making, and risk management. This could include setting targets to manage sustainability-related risks and opportunities. And also you can ask whether progress against these targets links to the executive remuneration. For more information, you can make use of the SSE checklist tool, but remember it's not a replacement for reading and using the full SSB standards. Okay, I think it's time for a few more examples. Over to you, Lois.
Thanks, Bella. Yes, that's right. The next example is to illustrate one company's approach to their governance model. And this is an example from a company called Yara, which is a global crop nutrition company, very big company, with a global presence. Now, in this governance model from within the sustainability statements in Yara's integrated report, we can see that Yara has a highly integrated model with responsibilities for sustainability embedded across relevant business functions, including risk management, health and safety, HR and global climate and energy. So the committees are the Board and Audit Sustainability Committee, you can see at the top left, and that committee assists the boards of directors in overseeing the process for and internal control of sustainability reporting and material impacts, risks and opportunities. We then have the Sustainability Governance Team. Now, they have a direct reporting line to the Chief Financial Officer, and they're responsible for sustainability performance and reporting, and their work is closely aligned with the corporate performance and risk functions. Then right at the bottom, we have the Sustainability Network, and they review Yara's accountability processes and the systems in place for environmental, social and governance policies, and they monitor the sustainability performance of the company, and that network is chaired by the Chief Compliance Officer. So 3 types of committees or teams involved in sustainability governance there. Last thing to notice is you can see arrows, and the arrows are used to indicate the flow of information and input between the different governance bodies in the organization, and to show how there are cross-cutting inputs from different teams to the sustainability activities. This is only one model, of course, a highly integrated one. The standards do not specify what type of governance model the company should have. Of course, it's up for the company to decide what's fit for purpose. Now, we do have another example in the handout, an example from Toyota, so do take a look at that when you have time, but I'm going to hand over now to Fiona to take us through the strategy part of the presentation.
Brilliant. Thank you, Lois. Yep, so there's a second example, as we've mentioned here, which we'll leave for you to review. But moving on now to the strategy area. So strategy has a few more disclosure requirements in it than within governance, but it's also really where companies can start to see the benefits from sustainability related opportunities and being better prepared for the risks. So as you can see here, there are three high-level areas that we focus on in strategy. So that's risks and opportunities, effects, and resilience. And so we'll review each of these separately. So for IFRS S1 and S2, the disclosure requirements on strategy are all around ensuring that users of your reports can understand the company's strategy for managing sustainability risks and opportunities. So if we first look at the requirements relating to the identification of risks and opportunities, here are some of the questions that you'll want to be asking yourselves internally to help you get started. So when you're disclosing information about risks, you're required to provide a description of the effects and the time horizons over which those effects are expected. And this is where we also need to keep in mind that financial effects could occur before the risk or opportunity materializes and or after, and they can change over time, if you remember that point we discussed at the start of the session. And on the climate front, there are some specific requirements on the climate disclosure within S2 as well. So this is where companies are asked to categorize the different risk and opportunity types that they have assessed and identified using the categories of physical and transition risk that's been identified by the TCFD. And both of the standards here include guidance as well to support companies in identifying and disclosing those risks and opportunities. And so there's further educational material available from the IFRS to support this. And it's also recommended that companies make use of the SASB standards and industry guidance as well. So looking at another example here of risk identification, this example comes from Mondi Group, which is a multinational packaging and paper company. So in the left-hand side of their disclosure here, we can see the list of overall principal risks that the company has identified. And the useful element here is that they've categorized these risks by relation to the different strategic aspects of their business. So things that are strategy, financial, operational, or compliance issues. They've also identified the risk owners for the individual risks and which aspects of their strategy each risk connect to. So a helpful way perhaps of summarizing that information. Then in the right-hand side of the disclosure, we see the more specific aspect on those climate-related risks and opportunities, where they further categorized climate risk into different types of physical and transition risk, and they've broken out as well those short, medium, and long-term time horizons over which they expect the effects of those risks to be felt. So another aspect of risk and opportunity disclosure that will be needed brings us back to what we talked about at the beginning of the session relating to time horizons. So as you remember, we talked about earlier in the session that time can be a somewhat different factor when we're talking about sustainability disclosures. So the standards ask that you identify within what time horizon any material effects are expected to occur. But how we define short, medium, and long-term horizons will vary between companies because it depends on a number of contextual factors. For example, the organization's investment and business planning cycles, its strategic planning horizons, and its capital allocation horizons, perhaps the assessment periods that investors are using for the company, or also the lifespan of any assets that it operates. So overall, what's important to remember here is that you do need to define for your organization in your disclosure what you mean by short, medium, and long term. And you can take a look at the framework that we've connected to on the slide here if you'd like to see some inspiration about how you might define these horizons. So now moving on to the next aspect of strategy disclosure. So firstly, we were talking there about identifying the risks and opportunities, and now we move into explaining what the effects of those risks and opportunities could be. And this is really where we're starting to think about asking ourselves questions such as how would that risk or opportunity affect the organization? What type of effect would there be? Which parts of the organization would be impacted? And what is the overall plan to respond or mitigate that risk? So looking at another example on this topic, we're looking here at the global chemicals company BASF's annual report. And this is just a short summary of the full report, which we do recommend with these disclosure examples. It's often easier, we know, to read the detail. So we've just provided a summary visual and a bit of an explanation for you to dive into in your own time as well. But within BASF's report, they do a good job of explaining how different risks and opportunities that they've identified will affect their business model and their value chain across the different stages. So they illustrate in their disclosure how these risks and opportunities have been connected into their overall strategy. So they're focusing on their strategy in supplying customers with products that contribute to sustainability through supporting the reduction of their carbon emissions. And among other things, they're investing in renewable energy to switch their operational plants to lower emissions fuel sources. They're thinking about how they can source materials that are bio-based or recycled from their suppliers. And then they're also thinking about how they can prioritize the products where they see a rising demand from their customers for more sustainable options. So this is an example of how the company has shown the impacts of sustainability risks and opportunities on its strategy and how it's then embedding those into its strategic approach moving forwards. So one of the obstacles we know that organizations can face when they're reporting on the effects of risks and opportunities is knowing what level of detail needs to be disclosed. And so in that example we just saw there from BASF, we mostly saw qualitative information in their reporting. But what about quantitative disclosures? So a company is asked to provide both quantitative and qualitative disclosures on the sustainability risks and opportunities and their effects. However, the S1 and S2 standards do also set out criteria for when only qualitative information may be permissible. So using qualitative information can be allowed for a number of reasons. So firstly, if the company can't separate the effects of a climate-related risk or opportunity from other effects. Secondly, if there is too high of a level of measurement uncertainty to be able to quantify that effect. Or finally, if the company itself doesn't currently have the skills, capabilities, or resources to provide that quantitative information. So that brings us on now to the last part of the strategy component. So firstly, we looked there at identifying the risks and opportunities, then describing what the effects of on the company will be. And now finally, we move into resilience. So thinking about how the company is prepared for uncertainties and ensuring that it's able to adapt to these risks and opportunities in the future. And this really gets into the practices of scenario analysis. So thinking about how to select relevant climate scenarios to assess the business, conducting that assessment and then disclosing in the reporting the outputs of the assessment and the assumptions and methods that have been used. So when we're getting started with this topic, some of the questions that we'll want to ask ourselves, we'll be thinking, how is our capacity to adjust to these issues at the moment? And what is it that we do or don't know currently that we need to assess? So if there are particular uncertainties, we want to start to identify what those are so we can plan to conduct our assessments to allow us to better understand those. And so we have one example here from a company called Stora Enso, which is a Finnish and Swedish forest products company. And in these diagrams, they show us really how they've assessed the resilience of the business and they've made proactive steps then to adapt how they operate. So the current kind of business as usual activities relate to forest products, so pulp and paper-based materials. But what they've identified through their analysis is they're expecting that the revenues that they'll see from that traditional business activity will be dropping. They've already dropped by 2024 and they may drop further in 2030. So what they've really done is focused on proactively repositioning their business from that business as usual pulp and paper company to become a renewable materials company. So that is how they see themselves ensuring their future for the years to come. So they've then identified potential growth opportunities for the business in buildings, sustainable building solutions, in renewable packaging, and in biomaterials as well. And so they set out in further detail in their report what actions they're putting in place to capitalize on those new opportunities and offset some of that potential lost revenue that they expect to see from the more traditional business areas. Okay, and then we have a second example in the report here, which comes from Solvay, a Belgian chemicals company. So in the interest of time, I won't go through this in too much detail, but I'll leave this one as well for you to review in the handout. But what we'd like to highlight from this example is that Solvay provide good transparency about the processes that they've adopted to conduct their climate scenario analysis. So they've explained the methods they've used, the key assumptions behind the scenario analysis. And then in the second part of the disclosure in that table at the bottom, they've then disclosed the different financial impacts that they expect to see from these risks and opportunities over different timeframes and climate scenarios. So they've provided that transparency about where they both expect to see potential decline in revenue and also potential increased revenue from opportunities as well. Okay, so to wrap up this section, we have another Zoom poll, which I'll just launch for you now, which was to test whether you were listening to one of the concepts that I discussed at the start of this segment, or in the middle of the segment, I should say, relating to when it's possible for companies to disclose qualitative information instead of or alongside quantitative information about the effects of risks and opportunities. So 3 options here, and you can select more than one. So let us know which of these you think is valid reason. So either if the company can't separate the effects of a climate risk or opportunity from other effects, if there's a high level of measurement uncertainty, or if the quantitative information sheds a negative light on the company. So I'll just give you a few more seconds to have a think about that and let us know which of those you think are acceptable reasons for disclosing qualitative information. Okay, I see our numbers are slowly going up, so give us a few more seconds to have a think about it. Okay, I think we'll close the poll there and I'll share the results with you. So that is correct that the top 2 options there are acceptable reasons. So both options 1 and options 2 are correct answers. However, as most of you identified, option 3 is not a correct answer because, of course, it's important if we do have quantitative information that suggests there could be a negative financial impact from a sustainability risk or opportunity, that we do provide transparency in our disclosures about that negative impact. And you saw that in those examples that we shared there, that those companies did provide balance in their reporting to share both opportunities and risks in their disclosures. Great, thank you everyone for that. So I'll pass back to Lois now, who's going to talk a little bit about some of the climate-specific aspects of strategy.
Yes, thank you, Fiona. Well, with the requirements on governance, for example, across S1, which is the general requirements, and S2, the climate-specific requirements, the actual disclosure requirements are very similar. When it comes to strategy, there are some additional climate-specific considerations. I'm not going to go through these in detail because you can refer to them in your handout. But just to say very briefly, sorry, the slides are moving a bit quickly. Sorry, there are some points that you need to take into consideration when you are disclosing about strategy in relation to climate. I'll just go through some of these. Firstly, you need to refer to and consider the applicability of industry disclosure topics. The industry disclosure topics are set out in guidance that you can find on the IFRS website. And all this means is that if, for example, you were in the personal products sector, you might be asked to consider your use of palm oil and where it comes from and whether that palm oil is certified. Secondly, S2 requires more detailed information about where in a company's value chain or business model risks and opportunities are concentrated. So this means you might, for example, have physical assets that are particularly vulnerable to physical related climate risks, in which case you would say that is where the risk is concentrated. The standard asks for companies to disclose information about the effect of climate-related risks and opportunities on their organization, but in particular, how a company is responding. And one such response might be to develop and disclose details of a transition plan. And we're going to come back to that in a moment. Fiona's already described to us the fact that there's a requirement for disclosing information about the current and anticipated financial effects of risks. And in S2, there are criteria for when quantitative and qualitative information is required. And as we've already said, a company is only required to use all reasonable and supportable information available to it at the reporting date without undue cost and effort. This recognises, of course, that some of these disclosures are difficult. We've already heard something about scenario analysis, and I just want to stress that S2 does not specify which particular scenarios must be used for climate-related scenario analysis. It just states that scenario analysis should be used for conducting your resilience assessment. And finally, information will be required about the resilience of your business strategy, including whether there are any significant areas of uncertainty considered by the company in its assessment, and whether and to what extent the company is able to adapt its strategy and business model over time in order to remain resilient or increase its resilience. So let's turn now to something I was just explaining. The S2 requires a company to explain how it is responding to the effects of sustainability-related risks and opportunities it's identified. And one such response might be to develop a climate-related transition plan. The standard does not say you have to have a transition plan, but if you do, you must disclose details about it. So what is a transition plan? Well, it's defined in the standard in S2 as an aspect of the company's overall strategy that includes targets, actions, or resources for the transition towards a lower carbon economy, including, for example, greenhouse gas emissions reductions plans. So let's look at that in a bit more detail. Because it's an aspect of the company's overall strategy, the climate-related transition plan should be aligned with the company's overall strategy, including the business case and motivation for the transition, and the levers that the company is most able to use that are most economically and technically feasible to support its decarbonisation efforts. The transition plan should also be aligned with science, including what science says about requirements for net zero to be achieved and how carbon neutrality or Paris-aligned goals are explained in terms of science. The transition plan should set long-term goals. It should be a plan over the long term, and that long-term goal should be supported by activities and targets to achieve those goals, but also interim targets to monitor progress towards the long-term goal. The transition, of course, is uncertain. We're not sure about the way in which the timing over which it will progress, and therefore the plan should be transparent about the dependencies for the plan's progress and success, and the risks and challenges of implementing it, including how residual and unabated greenhouse gas emissions will be treated. As well as being uncertain generally, of course, the transition will proceed in different ways for different sectors, and therefore sector-specific pathways should be consulted as they can inform the development of the company's transition plan by taking account of particular features of its sector. We're going to look at some resources for that in a moment. And finally, companies should consider how the transition plan will be evaluated by investors and others, and ensure that the plan has what the readers regard as being the hallmarks of credibility. And I'll say something about that when we look at the resources. So there are lots of resources on transition planning, and these are just some of them. The triangle on the left is just there to show that the resources offered by, for example, the Glasgow Finance Initiative for Net Zero, GFANZ, and the Transition Plan Task Force, they are all there to support the IFRS Foundation's work, and they are mutually supportive. Let's look at some of the guidance then. Well, in June 2025, so quite recently, the IFRS Foundation published new guidance entitled Disclosing Information about an Entity's Climate-Related Transition, including transition plans in accordance with IFRS S2. That's the first document you see there that has lots of comprehensive information about transition plans. Secondly, we have guidance from the United Nations Sustainable Stock Exchange Initiative, model guidance on climate transition plans. This contains technical but also practical information, and it sets out the hallmarks of credible transition plans that I just mentioned in the previous slide. We also have materials from the Glasgow Financial Alliance for Net Zero, including some guidance they give on sectoral pathways for financial institutions, but also for real economy companies. And finally, as we said earlier, the materials of the Transition Plan Task Force are now the responsibility of the IFRS Foundation and also available on the IFRS Knowledge Hub. So lots of different guidance for you to refer to if you have or are thinking of developing a transition plan. So you'll be glad to hear that we're about halfway through our training today. So we're going to have a quick break, just 5 minutes. So have a stretch, get a drink, and feel free to keep asking your questions in the Q&A box. We're going to play you some relaxing music, and we'll see you back here in 5 minutes. Hello, everybody, and welcome back from your break. I hope you had a chance to have a stretch and a drink and to think about what questions you would like to ask us. And now we're back. We're going to start looking at the third core content area, which is risk management. And this category of disclosures requires report preparers to disclose information about their processes for risk management, for sustainability risks and opportunities, as well as how those fit in with their overall risk profile within their company. So let's think about this a bit more deeply. Just as a reminder, when we looked at the strategy content area, we saw that we're talking about all sustainability related risks and opportunities with a focus on those that could reasonably be expected to affect the company's prospects. In this part of the core content areas, we're focusing on how a company identifies those material risks and assesses different risks and opportunities more broadly. So the sorts of questions you might want to ask within your own companies are, what processes and policies are being used to identify, assess, prioritize and monitor sustainability related risks and opportunities? And are they integrated into the company's overall risk management process? Also, maybe start thinking about the inputs and parameters used for risk management, the prioritization criteria such as nature, likelihood, and magnitude of risks that are used to assess the risks and opportunities, the monitoring process, and whether and how processes have changed since the last reporting period. Now, within the risk management, the thing to notice about the climate standard is that there are certain considerations that apply specifically to climate. So, although the title here is from TCFD to ISSB, don't worry if you don't know the TCFD recommendations because this information applies generally. So in the S2, companies are asked for information about the input parameters they use to identify risks, whether and how they use scenario analysis to inform their risk identification, and whether risk management processes have changed since the last reporting period. And the same applies to climate-related opportunities. In S2, the climate standard, we also have a definition of climate-related risks. So part of identifying risks is being aware of what risks and opportunities you should be evaluating to begin with. So we do have this definition. Now, climate-related risks fall into two categories. Transition risks arise from efforts to transition to a lower carbon economy, and they're often categorized as policy and legal, technological, market, and reputational risks. We can see some examples of these in the middle of the screen. So transition risks might come from increased pricing of greenhouse gas emissions, more reporting obligations, exposure to litigation, higher costs of transition to lower emission technologies, changing customer behavior, which might lead to the development of new products and services, uncertainty in market signals, and increased cost and availability of raw materials. On the physical risk side, that's the second type of climate-related risk. Physical risks include risks from climate change that can be event-driven, and these are acute physical risks, or from longer-term shifts in climatic patterns, and these are chronic physical risks, including changes in rainfall and temperature, sea level rise, reduced water availability and quality, biodiversity loss, and changes in soil productivity. Now, in both cases, in the case of transition risks and physical risks, they can give rise to financial effects that affect the cash flows of companies, their access to finance and cost of capital, and those financial effects can be felt over different time horizons, the short, medium, and long term. Similarly, S2 defines climate-related opportunities. These refer to the potential positive effects arising from climate change for a company. For example, efforts to mitigate and adapt to climate change can produce climate-related opportunities, such as opportunities for resource efficiency across the value chain, innovation, improving processes, using lower emission sources of energy, developing new products and services in response to changing consumer demand, accessing new markets, and enhancing the company's resilience. All of these are possible from enhancing climate-related opportunities. But again, these can have financial effects, hopefully normally positive financial effects that in which investors may be very interested from your disclosures, and these financial effects can manifest in your cash flows, access to finance, and change your costs of capital. And of course, these climate-related risks and opportunities can also have reputational effects that are not mentioned here, but could be equally important. Let's have a look at an example from a company called RS Group. This is a UK-based distributor of electrical and industrial equipment that has global operations, and it's an extract from their 2024 annual report. This company has analysed their climate-related risks and opportunities for a number of years. And elsewhere in the report, not this extract, elsewhere, they identified 10 principal risks to the company, one of which is climate-related transition and physical risk to their business. So you can see the connection between the identification of principal risks and the more detailed account we have here. This extract describes some of the physical risk. The most significant physical risks relate to the impact of extreme heat on the company's distribution sites, and you can see that on the first line. Another risk is the potential for extreme weather events to cause physical damage and disruption to their customer supply operations, and you can see that on the second line. You can see little red wheels on each of these lines, and that shows the connection of each of these risks to their wider business strategy, but also to the way in which those risks affect their stakeholders. In the extract, you also get a description of each of the risks, identification of who is the owner of the risk, so who is responsible for managing and monitoring that risk. The metrics used to monitor the risk are set out, and in the final column, you see the activities in the reporting year that have been taken to manage the risk, including capital investment figures and also what the company is focusing on for future years in terms of managing the risk. So that was the third content area of the standard, and we're going to go back to Bella now to take us through the final content area.
Thank you, Lois. Yes, yes, it's the final core content area, which is metrics and targets. We will look at this final content areas in details. Let's start with metrics. Requirements on metrics are designed to enable investors to understand the company's performance in relation to its sustainability-related risks and opportunities. So preparers shall disclose information explaining how the metrics are defined, if they are absolute or relative, if they have been validated by a third party, as well as the methodology. For example, what is the method of calculation? What were the inputs? Are there limitations, and what assumptions are involved? And there are a few questions for your reference. Okay, now let's move on to the second part of this category, targets. Requirements on targets are designed to enable investors to understand the targets a company has set to monitor progress towards achieving its strategic goals. And disclosures include whether they are qualitative or quantitative, and whether it is set voluntarily or by law or regulation. And also, disclosures include the metric used to set the target and to monitor progress towards its achievement, the baseline period from which progress is measured, and the period to which the target applies. What are the milestones and the interim targets? And also, if there have been any revisions to the target, together with an explanation about the revisions. So it's time for Lois to take you through an example.
Yes, thanks, Bella. And this is an example about metrics and targets from CLP, which is one of the largest investor-owned power businesses in Asia Pacific, and they have an aim to be a leading responsible power provider. This is an extract from their 2024 sustainability report that shows their waste management and material use metrics for 2024. And you'll notice that many of the examples we've shown you to in this training so far have been about climate change. Here we have an example about metrics and targets on waste management and material use. That's because the S1 standard requires companies to disclose information about all sustainability related risks and opportunities. So the company reports this because part of their strategy, as we can see on the right-hand side, is to reduce their medium and long-term waste targets. And they've set targets for the years 2025 and 2030. And they also explain to us that they're setting those targets against a base year of 2021. You can see the results in the bottom on the bottom of the screen that they're reporting results as at 2024 that are in line with their expectations, and they also show us what the target is meant to be by the end of 2025 and the end of 2030. So some of these targets have indeed been satisfied. The last thing I want to mention about this is that the metrics have been calculated according to the SASB and GRI frameworks, as you can see in the pale grey writing on the first panel there. And that's because at the moment we don't have an IFRS sustainability standard on waste management and material use. So as they are allowed to by the standard, they've used SASB and GRI to do that. So back to you, Bella, to take us through the next part of metrics and targets.
Thank you, Lois. So now let's talk about some of the climate-specific considerations for disclosures on metrics and targets. Okay, the TCFD framework included recommended disclosures, which IFRS S2 builds on, and S2 as part of required disclosures. For example, IFRS S2 requires disclosure of industry-based metrics relevant to a company's business model and activities. And additional disclosures are required on GHG emissions, including separate disclosures for the consolidated accounting group and associated joint ventures, and information about the company's financed emissions. In addition, S2 sets out a Scope 3 measurement framework to provide guidance for preparing Scope 3 GHG emissions disclosures. While IFRS S2 doesn't explicitly require a company to disaggregate its GHG emissions disclosures by the constituent gases. S1 includes requirements on disaggregation that would result in the disclosure of the constituent gases being required if such disaggregation provides material information. I'd like to remind everyone that you can access more information on climate metrics in the SSE's training tool on this topic. We will share the link in the chat, and you can also find it on the SSE's website. Okay. Likewise, there are some additional disclosures compared to TCFD for targets as well. For example, IFRS S2 requires disclosures about how the latest international agreement on climate change has informed the target and whether the target has been validated by a third party. S2 also requires disclosure of more detailed information on GHG emissions targets, including additional information about any planned use of carbon credits to achieve a company's net GHG emissions targets. And the S2 also includes additional requirements to disclose information about the approach to setting and reviewing each target, and how it monitors progress against each target, including whether the target was derived using a sectorial decarbonization approach. Questions on GHG emissions often come up in questions on metrics and targets disclosures. So we wanted to address some of these briefly. For those who might not be familiar with the different scopes, and I'd like to introduce a little bit. So scope 1 includes all direct emissions that occur from sources owned or controlled by the company, such as emissions from your company's facilities or vehicles. And in terms of scope 2, that includes emissions from generation of acquired and consumed electricity, steam, heat, and cooling, such as the electricity you purchase. And for scope 3 is all other indirect emissions that occur in the company's value chain. And the S2 requires a company to disclose its absolute gross scope 1, 2, 3 GHG emissions in accordance with the GHG Protocol corporate standard, unless a jurisdiction requires a company to use a different approach to measurement. If a company is using a different measurement method, there is a transition relief to use that method in its first year of applying the standard. And S2 also requires a company to disclose whether and how the company is using an internal price on carbon for decision making, and whether and how executive remuneration is linked to climate change. And on 29th of May of 2025, the IFRS Foundation has published a new educational material presented in a Q&A format detailing the greenhouse gas emissions disclosure requirements under IFRS S2, including measurement, use of the GHG protocol, and how to report scope 1, 2, 3 emissions in line with the standard. Okay, so it's time for another example. Over to you, Lois.
Thanks, Bella. Yes, this example is about greenhouse gas emissions reporting. It's from Enel, which is an Italian producer of and distributor of electricity and gas. Enel produces a GHG inventory, which is a separate document from their other sustainability disclosures, so they can go into lots of detail about their greenhouse gas emissions. They start with describing the company's ambition to achieve zero emissions by 2040 and to promote energy generation from renewable sources. At the top of the slide, you can see the company's carbon footprint broken down scopes 1, 2, and 3 that Bella just described. So you can see that there are shaded graph bars, and these represent the emissions in 2022, and there are dark blue graph bars for 2024. So for each of the scopes, scope 1, 2, and 3, you can see the comparison from 2022 to 2024, and you can see that emissions are falling, they are going down. You can also see which of the scopes 1, 2, and 3 gives rise to the most emissions. So you can see scope 3 is the highest source of emissions, followed by scope 1. Now, at the bottom of the screen, there is a breakdown or disaggregation of the company's Scope 2 emissions, and this is only an extract from the breakdown. It's just to give you a sense of different ways in which you can provide additional detail about greenhouse gas emissions. So they break down their Scope 2 emissions by business activity, so by power generation, is the business activity they're referring to, also by the source, the greenhouse gas source, so from electricity consumption from grid in power plants and from electricity consumption from the grid in terminal ports in particular locations, so we can see where the source of the greenhouse gas emissions is related to that activity. Again, they give us a comparison between 2022 and 2024. And finally, they give us a distinction between Scope 2 calculation methods. Now, there are two calculation methods for Scope 2 only. Don't worry about this for Scope 1, certainly. But the market-based method reflects emissions from electricity the company purchases based on the contracts it's entered into, and the location-based reflects the average emissions intensity of the local electricity grids to which the company is connected. So quite a comprehensive breakdown, but a very small extract of the detail Enel provides. Let's do a Zoom poll now. And this Zoom poll asks, what is the objective of metrics? And in particular, what's the objectives of the requirements in the standard to disclose information about metrics? Is it to enable report users to understand performance in relation to a company's sustainability-related risks and opportunities, to understand progress against any targets, or to understand the company's assumptions for the future? You can pick as many as you think are correct here. Thank you for your participation. It's great to see. I'm going to share the results with you now. And you'll see that most of you answered A and B, and that's correct, absolutely correct. So well done. It may be the case that by reporting the company's metrics and targets, users can understand the company's assumptions for the future. So it's not incorrect. But the reason we have asked the question in this way is to encourage you to read the standards themselves, because at the beginning of each of the core content areas, the standard sets out the objective of why they're asking for this information. And in the case of metrics, it is to enable report readers to understand performance in relation to risks and opportunities and understand progress towards targets. So if in doubt, always have a look at the standard to understand what the objective is. So we're going to move into another section of the Align module now, which is how to integrate other disclosure requirements with the global baseline we described earlier. Now, I'll go through this quickly because we've already talked about what the baseline is. The global baseline is the common language for sustainability reporting set out in the standards IFRS S1 and S2. But in addition to those requirements, companies might want to disclose on voluntarily or because they have to other information. For example, because they're subject to listing requirements, because there are policy objectives they want to disclose information about. So some governments might offer incentives like tax cuts or subsidies for sustainable practices, and disclosures might be required to gain from those. Similarly, companies might also need to or want to provide additional disclosures to align with emerging industry practices, very sector-specific information, or to provide information for a wide stakeholder group in addition to investors. So you can build on that baseline. As far as the baseline is concerned, the ISSB works with national regulators and others who are considering how to incorporate ISSB standards into their domestic frameworks, including thinking about at what time they're going to do this, what the scope of the requirements will be, and how they align with any existing requirements. As at June 2025, 36 jurisdictions have adopted, use, or are finalising the adoption of the ISSB standards, and the ISSB publishes jurisdictional profiles and snapshots to show that progress. They also have other materials that you can look at if you're interested in understanding how jurisdictions are thinking of or actually adopting the ISSB standards, and there are links to those resources on the slide here. Of course, in addition to jurisdictions, the ISSB knows that there are not-for-profit and other organisations that already ask organisations for sustainability information. So the ISSB works closely with them to support what they call interoperability, which is a way of reducing duplication, encouraging harmonisation, and improving efficiency in the reporting system. We saw some of this earlier, so I'm going to just focus on two of these. First of all, the greenhouse gas protocol is the protocol that must be used for measuring greenhouse gas emissions. The ISSB is working closely with the greenhouse gas protocol team, both in terms of technical updates, but also on governance to ensure the two organisations are aligned. And then right at the bottom of the screen, we see the Task Force on Nature-Related Financial Disclosures, and the ISSB has recently announced its intention to work with the TNFD and to look at their recommendations and their work to develop material on nature-related biodiversity, ecosystem and ecosystem services disclosure requirements. We saw at the beginning that many of you are using the Global Reporting Initiative standards, and you'll be pleased to hear that GRI and the IFRS Foundation are working together to identify and align common disclosures. Now, the most important thing to state here is that in June, the GRI's Standard Setting Board granted equivalence to IFRS S2 disclosures on greenhouse gas emissions. What this means is that if you're using GRI 102 and or the IFRS S2, you only have to measure and report your greenhouse gas emissions once. There are some conditions that apply to this, so you have to include a reference showing the location where the information for each of the disclosures may be found. So great harmonisation there on greenhouse gas emissions, and there's also a commitment to deliver greater interoperability on the ISSB's project about biodiversity, ecosystems and ecosystem services by drawing on GRI's Standard 101. Now, maybe not for this audience, but many of you might be aware that in Europe there is the Corporate Reporting Sustainability Directive that requires companies to report sustainability information according to European Sustainability Reporting Standards, ESRS. Now, the thing to mention here is that, again, the IFRS Foundation is working closely with the European standard setter to ensure as much alignment as possible. There are differences between these standards that mainly relate to their different objectives. The European standards cover impacts as well as risks and opportunities and serve the information needs of a wide stakeholder group, whereas we know the ISSB standards focus on risks and opportunities for investor decision useful information. The European standards are under review at the moment, so I won't say too much about this, except that the work that's already been done has found a high degree of alignment between climate-related disclosures in the two organisations. We heard at the beginning, didn't we, that the integrated reporting framework has been adopted into the IFRS Foundation. It can still be used, in particular to support a more holistic view of the value creation process over time. Now, I'll just mention here that if you're interested in this, there is a tool to support you using integrated reporting to complement and enhance your ISSB disclosures, and you can find more details in the little report that we have given you the picture of here. The important thing about integrated reporting really is that it's underpinned by integrated thinking. We've heard how important connectivity is, and integrated thinking can certainly enhance the quality of a company's corporate governance and disclosure. So we've got one more Zoom poll before we go to the Module 2 summary, and you can only choose one of these. So your disclosure objectives should consider the ISSB standards only, ISSB standards and regulatory requirements, just regulatory requirements, or all of the above and other sources of guidance. I can see you know the answer to this, so I'm going to share the results with you. Yes, of course, you're correct. You consider the ISSB standards, regulatory requirements, and other sources of guidance, that all these resources to help with and enhance your sustainability disclosure. So well done. With that, we've come to the end of Module 2, and Fiona's going to give us a summary of it.
Thanks, Lois. That's great. So as we say, that wraps us up now on Module 2. So before we go into the Menti, which I'll just share with you so that you have the link to Menti, because we'll do another exercise, I'll just summarize a few of the key points from this module. So firstly, we reviewed all of those 4 core content areas of the ISSB: governance, strategy, risk management, and metrics and targets. So a really important thing to remember here is that, of course, these activities don't operate in silos. And we saw in the example disclosures that despite having 4 separate categories of disclosure, of course, they're all interconnected. And we also discussed how your disclosure might go beyond the requirements of S1 and S2. For example, to meet different stakeholder needs, to meet regulatory requirements in certain jurisdictions, or to meet industry standards as well. And so what's important to remember when you're doing this is that the ISSB standards have been purposely developed to act as a baseline. And so that building blocks approach that we talked through allows report preparers to add additional disclosures on top. However, in doing so, report preparers do still need to be careful that they don't obscure the requirements of S1 and S2 as well. Okay, so now we're going to have a quick look together in Menti at our next exercise to wrap up this module. So we started in our first module by thinking about what the objectives are in our disclosure plan. And now the next aspect of the plan that's quite important is to identify the gaps that we might have in our current disclosures or reporting processes that we need to address to adopt the standards. And so, of course, what we'd recommend that you do here is to conduct a full gap assessment to understand what areas it is that you need to address. And so there's a checklist available in the home worksheet, which can be used to support you here in conducting that gap assessment. However, what we'd like to do together today is just to identify key gaps, what's front of mind for you at the moment. And so as an example, some of the types of gap that you might want to consider could be what particular content areas or enhancements you need to put into your reporting to meet those disclosure content requirements that we've just presented. Or it might also be a process thing that you think you need to address. So maybe there's a new governance process, a new data process, or maybe there's new skill sets or teams and resources that you need in the organization. So of course, there will be lots of different topics to consider here, but let's just take a moment to reflect maybe on your kind of key 1 or 2 things that are in your mind from what we've presented in terms of your key gaps. Okay, great. I see some responses already on this. So thank you for those who are quick to respond and gives others a little time to have a think whilst we talk about your answers. So I'm seeing a lot of people mentioning measurement and metrics here. So perhaps the last aspect that we just presented there, but of course for many organizations, excuse me, data is a key challenge here and something that needs to be addressed. So that's understandable for sure. And someone has identified particularly as well the S2 requirements and the GHG emissions disclosure needs, including scope 3, and thinking about, someone else has also mentioned about the value chain and suppliers. So, of course, getting data from value chain partners can often be quite a challenge. And that's where the GHG reporting methods often recommend estimation techniques that you can use firstly to get a sense of priorities and key areas before you then try to target engagement to your most significant suppliers to get better information from them. But thinking about how you can build these requirements into your supplier engagement and qualification processes can be helpful as well. Okay, I see that data slide coming up. Someone also mentioned SME related guidance, and I know that question has come up a couple of times in the Q&A as well. And as we've responded, the IFRS standards, there's no specific plan at the moment to develop an SME version. However, of course, the standards are designed to act as that baseline and be focused on the most fundamental things. The SSE does have some guidance for SMEs, which I've shared in response to those questions, but I'll also share that in the chat after this as well in case it's helpful. Okay, data, again, I see many times mentioned here, and having, someone's mentioned defining private and confidential information. So that's an interesting point as well. Obviously, when we start to get into the types of data we need for sustainability, sometimes there may be some commercial sensitivities to that or privacy considerations as well, if it's, for example, data on employees. So that is a really important point to consider and make sure that you're collecting things in a robust way to manage some of those risks as well. Setting a well-structured strategy to govern sustainability performance. So yeah, having that sort of fundamental strategy that gives you the structure and the foundations to collect this information and govern it in the right way. So we do recommend getting the basics of your governance in place is quite important as a foundation here. So thinking about how you can assign responsibilities at board and management level to make sure you've got the right buy-in and oversight for these activities is quite key. And of course, part of that as well may be about making the case to your leadership for the need for extra resource on this topic, because of course, we might have quite large financial accounting and reporting teams in our organization, but often traditionally sustainability reporting might be the job of one person or a small number of teams or just part of someone's job. But as we're moving towards, the adoption of the ISSB standards and mandatory reporting requirements, of course, that might need to change. So thinking about your resourcing needs early in the process is a good idea as well. Some people have mentioned about kind of integrations and reporting flows. So thinking, I think, as much as you can about how to utilize any existing systems that you have to support you there is a good idea. So for financial accounting, again, there's likely to be established processes and controls. So could those be adapted and used for sustainability disclosure to allow you to have similar rigor? Is a good question. So people have mentioned data, I see lots of times again. Someone's also mentioned about the understanding of your own organization's leadership and C-suite. Of course, that's quite important that they understand why this is important, and ideally as well that there's more to gain from this than just regulatory compliance. So I think that's a message that you do need to keep repeating. But that's where we think this disclosure plan that we're focused on in the homework exercise is something that can be really helpful. And we'll share a bit more about that later. But having a disclosure plan that builds common understanding of what you're trying to achieve here and how you plan to go about it can be quite useful there. Great. Good. I think lots of other people sharing similar thoughts. So I think at least it's always good to know that we're not alone with these issues, isn't it? I think there's a lot of commonality but across organizations of the challenges. So encourage you to look out for some case studies and peer organizations who've maybe shared their journey on this a little bit, because that can be quite helpful to understand how other organizations have approached this. But I think a lot of the gaps you've identified there are the things that we hear very commonly as well in many organizations, the things that they need to think about here. So overall, as we say, we'd recommend going away to conduct a more structured gap assessment and also thinking about how you prioritize addressing these gaps. So of course, it may take several reporting cycles to be able to tackle some of these issues, and that's understandable. But try to think about what are the most significant or foundational things that you need to get in place for your first disclosures, prioritize those, and then maybe think about how to sequence those activities that could be improved or evolved over time as reporting matures. Great. Thank you so much, everyone, for sharing with us there. And I'll take us back to the presentation and I'll pass back over to Lois, who'll get us started on module 3.
Yes, thank you, Fiona. And I think the Menti we've just seen shows that, people are concerned about the practical implications of these requirements and how to implement them. So that's what we're going to talk about now. We're going to have 3 sections on implementation. Now we understand what the content requirements are. We're going to look at some of the practices and processes that can be used for implementation. It's all about how. So we're going to look at 3 things. First of all, how to identify sustainability related risks and opportunities. Secondly, some evaluation processes, particularly relating to resilience assessment and scenario analysis. And thirdly, how to integrate with your existing processes and policies, the sorts of data and other requirements you might need to support your sustainability disclosure. So let's move to the first one, identifying sustainability related risks and opportunities. Well, just as a reminder, IFRS S1 asks companies to provide material information on all sustainability related risks and opportunities that could reasonably be expected to affect the company's prospects. And we only have a standard at the moment for climate-related disclosures. So what if you have risks and opportunities beyond climate, such as biodiversity or human rights or waste management, as we saw earlier, for example? Well, S1 does set out guidance on what you can do in those situations. First of all, it says that when identifying which sustainability-related risks and opportunities to report on beyond climate, consideration must be given to the SASB standards, Sustainability Accounting Board standards. And these are available on the IFRS website, and they give you indications about what at a sector specific level the risks and opportunities might be that apply to your company. So in the construction industry, for example, waste management, if you're in coal operations, the sensitivity of minerals to price fluctuations in markets and that type of thing. In addition, companies can consider a range of other materials, the IFRS education material on sustainability-related risks and opportunities and disclosure of material information. That's very comprehensive, again, available from your handout. Companies can also look at the CDSB framework application guidance, which covers a wide range of subject matter, including water and biodiversity, but also can look at the industry practice and guidance materials and materials of other investor-focused standard setters. So that might include the integrated reporting framework. So once you've used this guidance to identify which risks and opportunities you might want to report on, then you have to think about what information shall you report. And in fact, the same applies, the same guidance applies, but in addition, you can look at the GRI standards and the European Sustainability Reporting Standards. So we saw this in the example earlier from CLP, didn't we, where they'd use GRI and SASB to report on their waste management metrics and targets. Let's look at an example now, and this is from a company called Ayala, which is a Philippines-based conglomerate. They've got lots of different activities in property development and management, banking, healthcare, technology, and so on. And they set out here their process for identifying risks to the business. Now, all of the processes that are in the 4 steps laid out here are informed by communication and consultation. So we saw in the Menti that perhaps many of us feel rather alone in how to approach these disclosures, but communication and consultation is at the heart of the process for Ayala. Their 4-step process then is to establish the context in which they operate. So they look at internal and external factors that inform the risk landscape, if you like, and their enterprise risk management team is in charge of that. They then do some risk assessment to identify, analyze, and evaluate and prioritize the risks that they have identified from the first step. So they can then get a sense of what is their risk universe. Thirdly, they decide how to treat the risk. What's the appropriate plan of action to address the risk and in which functional areas? And again, they identify different risk owners, if you like, to take charge of that risk treatment. And finally, they have a process for monitoring and reviewing the risk. So that's the process that Ayala uses. I'm going to look at another company now for a slightly different process. This company is called Nest. It's based in Finland, and it produces sustainable aviation fuel, renewable diesel, and feedstock solutions for the chemical industry. So it uses science and technology to transform waste and other resources into renewable fuels. So what do they do about identifying risks and opportunities? Well, in this case, the company uses scenarios. 2 different scenarios they consider. One is a net zero world 2050, and the other is compromised climate targets. So they give us a description of what they mean by this. In the net zero world, they imagine that greenhouse gas emissions will be reduced and that global warming will be kept to 1.5 degrees C above pre-industrial levels. Now, they split this scenario into a global one and also for Europe and North America. And they do that because some economies take action at a faster pace than others. In both cases, in the net zero world cases, the company anticipates opportunities from a growing demand for their renewable and circular solutions. On a global basis, they can expand into new markets and sectors, and in the Europe and North America, they expect their supply of renewable and circular solutions to be supported by regulatory and voluntary ambitions. Of course, there are risks too, and these are associated with competition and acceleration of new technologies. The second scenario they use, compromised climate targets, anticipates very slow climate action and that global warming could go up to 3 degrees C above pre-industrial levels. In this case, they still see that there are opportunities for the company to differentiate itself from others by providing renewable and circular solutions, but the risk is that the demand for those products will be constrained in the compromised climate target scenario. Last thing to notice here is that they give an indicative financial impact in each of these scenarios, and the positive financial impact is likely to be felt in net zero world 2050. And perhaps you would expect that because that's where there's the greatest opportunity for them to develop their sustainable solutions. So on the next slide, I'm just not going to mention this in too much detail because we've already covered it, but the standards recognise that it's not always easy to identify and report on sustainability-related risks and opportunities, and therefore it says that in applying these requirements, the company is required to use all reasonable and supportable information available at the reporting date without undue cost and effort. So take a proportionate approach, that it does not give you undue cost or effort. What does this mean though? Well, it means it refers to information that is specific to the company should know that takes account of the external environment. We saw that in the Ayala example. It includes information about past events and current conditions. The company will know those, but also forecasts, perhaps informed by scenarios as we saw in the nest example. And in some cases, exactly what is meant by reasonable and supportable is specified in the disclosure standards. So we've done the first part about identifying risks and opportunities. Let's go to Fiona for the evaluate part of this module.
Brilliant. Thank you for that, Lois. So moving into evaluate, we're going to be thinking now about how to evaluate those financial effects of the risks and opportunities that we firstly identified. So helping investors to understand a company's resilience about climate risk requires a company to disclose information about the implications of climate change on its strategy and business model. And so this is what S2 asks organizations to do. It asks companies to look at their financial and operational capacity to adjust or adapt over the short, medium, and long term. So, for example, you might want to test your company's resilience against a new regulation to limit certain high emissions activities, or perhaps your ability to respond to changing crop yields as a result of more frequent heat waves. So to do this, you're going to need to use scenarios based on science and analyze how these scenarios will lead to effects for the company. And so when we're talking about scenario analysis, it's important to remember that scenario analysis is not requiring a company to predict the future. It's a tool to test resilience against potential future events. So simply considering plausible possible pathways, but not necessarily forecasting or predicting what will happen. And so when you're disclosing on this topic, companies are asked to identify which scenarios they have used, to provide information about the assumptions used in the analysis, and to disclose their overall conclusions that they've reached about their strategic resilience. And the ISSB standards overall ask a company to use an approach that's commensurate with its circumstances and that uses all of the reasonable and supportable information that is available to the company at the time of reporting without undue cost or effort. So I think we could have a whole course really on scenario analysis, but just to give you a bit of a flavour of it today, we're going to share an example from Nestlé, the Swiss food and drinks company. And here we're seeing one of the outputs from their climate scenario analysis that they include in their non-financial statement. And this visual shows the potential impact of physical climate changes on the yield of 12 of their key agricultural commodities out to 2040 under a medium emissions scenario. And the modelled metric that they've used is the projected percentage change in crop yields to 2040 compared to 2022. So the analysis shows that because of increased heat waves, droughts, and water stress, there could be an impact on the availability and quality of the key raw materials that they need. And that in turn could then lead to increased price volatility and input costs, and as well as affecting the overall stability of their supply chain. And in their disclosure, they go on to summarize the key outcomes of this analysis for different aspects of their business, and then the steps that they're taking to improve the resilience as a result of this data. So, for example, they have started to consider how to innovate products, how to consider R&D opportunities to leverage crop science to improve the resilience of their crops, for example. And so, of course, when we're talking about the materiality of future events, we know that there's a lot of uncertainty there and that this can be very challenging to disclose and to estimate. And so to help in determining this, the IFRS S1 standard gives you a list of a number of issues that you should continue to evaluate. So you can think of this list as the different steps to take to come to the judgment about what is potentially material and what are the uncertainties associated with that you need to keep under review. So, for example, companies should be thinking about the amount and timing of impacts, how often they need to reassess this, and also making sure that they're considering low probability and high impact outcomes. And so this is something that companies are asked to assess and disclose for each reporting period. Okay, so that takes us to evaluate and back to Lois for integrate.
Thanks, Fiona. Yes, we're going to look at processes now. Now, the good news is that in many of your organizations, you may already have processes, systems, and other things that can help you with your sustainability reporting. So we've already mentioned governance and risk management systems, control systems, and so on. They may already be in place in your organization and they can help. So here are some questions and considerations you might ask when considering whether and to what extent you can use existing processes, adjust them, or whether you need to develop something new. Now, gap analysis, I think, has already come up. Shall we check for gaps in existing systems and processes to see if there's anything that needs to be added to collect sustainability-related information? How suitable are the systems that we already have within the organization? We know that sustainability related risks and opportunities have particular characteristics and can manifest over longer time horizons than other risks. Do we need to include that in our processes? What about prioritization criteria? If the processes currently in place simply use criteria of probability and likelihood, this may not be sufficient to prioritize sustainability information that has these different characteristics. You could include other criteria such as impact, vulnerability, and speed of onset. Internal controls can be a helpful way of managing sustainability related information. People, of course, are important. Who within your organization or elsewhere has expertise, processes, systems, and plans that can be used to support your sustainability disclosure? They might be internal or external experts. What interconnections are there between different internal and external factors that need to be taken into account when you're looking at developing processes or creating new ones? And how do you deal with uncertainties? What is the process for dealing with uncertainties from sustainability related risks and opportunities? Does that uncertainty management need to be built into your processes? And finally, what resources are needed? If you need to develop something new or adjust a process, do you need to go through a budget or change management process? All things to consider. Now, as you know, the recommended but not compulsory homework from this training is to develop a disclosure plan. So what is it? A disclosure plan is a standalone strategy, or it can be part of a wider disclosure strategy that also takes account of, say, financial statement and governance and risk disclosures. But what it enables, this plan enables you to take control of your narrative by recording information about your company's strategies, your company's risks, and so on, the laws and standards with which you have to comply. So it's very company specific. It supports the internal collaboration we've already mentioned. So you can list in your disclosure plan who should be consulted when you prepare your disclosures. Who has the knowledge? How are they organized? Should they meet, have committee meetings periodically, and so on? What are their responsibilities? So the plan itself is a reference point and audit trail showing where and how judgments have been made, who's involved, how data will be sourced, which systems and controls are used, whether you're going to get assurance and from whom, what is the sign-off procedure for the disclosure, and so on. I'm going to show you an example now. There's a lot on this screen, but it's an example from the Danish pharmaceutical company Novo Nordisk. And what they're doing in their annual report here is setting out right at the start the basis for the preparation of their sustainability statement. So they tell us in the first and second paragraph the standards and frameworks they've used, and you can see there are a lot. They've used the Greenhouse Gas Protocol, the Science Based Targets Initiative, the TCFD, the GRI, but also they've listed the regulations to which they are subject. They tell us the time horizons they've considered for the preparation of the sustainability report. This extract also includes information about how the company has used estimates and where to find information about assumptions and uncertainties. And there's lots of other contextual information that's designed to help the reader understand how this sustainability information has been prepared. And as you can imagine, it's much better to have all of this set out in a disclosure plan before you start the disclosure cycle. So let's have a look at a Zoom poll now to see what we think of this. You can only answer one question here, either yes or no. Is a disclosure plan required by the IFRS sustainability disclosure standards? You can answer yes, and you must disclose your plan, or no, but it's a very helpful tool. A minute to think about that. Thank you for participating. That's great. Let me share the results with you. You can see that you're quite evenly divided here. The correct answer is no. So well done to those of you who said no. There is no requirement in the IFRS sustainability disclosure standards that says you must have a disclosure plan and you must disclose details about it. So those that said no are correct. Now, bear in mind, though, that there are some individual requirements that do ask you for the type of information you would find in a disclosure plan. So in some cases, you'll ask, what sources of guidance did you use? What judgments did you make? What sources of measurement uncertainty did you encounter? So you'll see that having a disclosure plan would help you with those specific requirements, but there's no overall requirement to have a plan. We simply recommend it because we think it's very helpful. So on the next slide, we have another, I do apologize. We have another Zoom poll, and this asks about what the disclosure plan can help a company to do. Take control of its narrative within general purpose financial reports, support collaboration and knowledge sharing, act as a reference point and audit trail for disclosure preparation, or skip full disclosure as prescribed by the ISSB. Apologies for my phone ringing. Yes, let me share the results with you here. Yes, of course, you're all right. It's all of the first three, and it's helpful for all of these reasons. If I were to identify something as being very important, I'd say the reference point and audit trail. So well done, everybody, for completing that. And we're going to go back to Fiona now for the Module 3 summary.
Brilliant. Thank you for that, Lois. Okay, so as we say, that wraps us up on our third of 4 modules. So well done, everyone. We're doing well to come through all of the content. So thanks for all of your engagement as we move through this. So to wrap this module up, we'll just remind ourselves on a few key things. So firstly, coming back to connections. We talked last module about the connection between the 4 core areas of disclosure. And now we're talking about the connections between a company and its external and internal environment. And so this is what we really need to focus on when we're identifying those risks and opportunities. Secondly, we talked here about assumptions and the importance of using consistent assumptions when we're undertaking things like scenario analysis and making sure that we're good at documenting and disclosing those assumptions in our reporting as well. And then finally, as we've seen, even if some of this data might not be things that you're already disclosing, it could well be that you already have processes in place that could be adapted to collect the information, or maybe you actually have that data somewhere in the business, you're just not reporting it yet. So as much as we can, trying to adjust and adapt processes without starting from scratch is what's recommended. So to give us a bit of a moment to reflect on that, our next exercise together in Menti will be to think about how to build on and resolve some of those gaps that we identified in the last exercise. So I know that many of you identified data quality and completeness and data collection as a key gap that you had versus the reporting requirements. So what we'd like to think about together now is what are some of the steps that you could take to help you to address this? So thinking about maybe how you can use data that you already have in the business to support your reporting, or maybe how you can adapt or integrate requirements into existing processes to support you in gathering the right sorts of information. So we'll go back to Menti now, and the question this time is, what are the existing systems and processes that you might have in place that you can adapt to help you collect this data? So we find this one is usually quite a good exercise in crowdsourcing the ideas, because if we all share an idea or two, we'll probably realize that actually between us, we have a lot of the same sources of data available to us in our companies that we can hopefully tap into to help us here. Okay, so I see mentioning GHG reporting platforms and ERP systems, several mentions of the ERP. Discussing it with your finance department, indeed, are definitely a good idea, because obviously they'll have good systems and processes in place that you might be able to adapt, or maybe they're collecting things that could be relevant to assessing sustainability risks and opportunities as well. Someone's mentioned for banks looking at the collateral lists of our borrowings, so that's a good idea. Yeah, definitely to get a sense of what is already kind of been assessed and considered for that process. People have mentioned as well using operational data, so that's definitely a good idea. So you might be monitoring things at a site or operational level that become useful when you're aggregating them up to the company level. Thinking about your policies as well, what policies you have in place could be a good point to review for sure. People have mentioned having interviews as well. Yeah, so maybe you could interview stakeholders, customers, investors, clients, etc., to understand what they're doing. Using SAP and Excel, maybe recording things in spreadsheets, thinking about your stakeholder engagement processes. Great, lots of really good ideas here, and definitely all things we'd recommend. Maybe it's been mentioned, but one thing I'd also highlight here is to utilize your enterprise risk process as well. So as much as you can, embedding that assessment of sustainability risks into your existing enterprise risk process will be very valuable. And also thinking, as someone's mentioned here, about your governance, because actually you need the right governance in place to build your data collection controls and processes. So thinking about some of the foundations that you can set up there to help you build the right data processes will be important. Great, thanks everyone for sharing again. And we'll get started now with our final module, Communicate, which Robert will be taking us through.
Yes, great. Hope you can hear me and see me well. Welcome everyone. My name is Robert Swiatkowski from the IFRS Foundation, and indeed we'll be going now to the last module of this training. So we'll be talking about communication and focusing on the aspects like when and where of the disclosure of sustainability-related financial information. So this last module has 3 sections. The location, timing, efficiency, and confidence. So to get started, we will then talk about, we will clarify where the sustainability disclosure should be located. But before going into the details, I wanted to give you a little bit more zoom out perspective on the reporting package and how it should be seen. So then we should think about sustainability disclosures in the context of complete reporting package that it's useful to investors. So as you know, our investors already have access to a company's financial statements. IFB standards are designed to identify sustainability-related risks and opportunities that complement the financial statements. So these all come together in a reporting package that we all call a general purpose financial report. And now the requirements in the ISB standards are about what information to report are based on existing sustainability reporting regimes, focus on investor information needs and aspects of financial accounting standards. So now where the GRI stands here in this picture, GRI standards expand on sustainability metrics relevant to broader societal concerns. So IFB and GRI reporting standards share the same content requirements and for example, what to report, but the ICSB standards are focused only on investors' information needs and decision-making, reflecting the mission of the IFRS Foundation, and which is to bring the transparency, accountability, and efficiency to capital markets around the world. Both organizations, ISB and GRI, take different approaches to defining materiality, but they are not competing. The GRI approach is set to understand and understood among sustainability practitioners, whereas IFRS approach is familiar to accountants and relies heavily on management judgment, aligning with existing corporate risk management processes. So together, these frameworks enable companies to meet the growing demand of transparent, consistent information across financial and non-financial dimensions, aligning both investor priorities and broader societal expectations. And then how they can impact or where there could be overlap. We can think about a simple example where the double materiality assessment, which is what GRI is about, identifies that some of the company's impacts also create sustainability risks, which could be so significant that are important to disclose to investors. So there is a possibility there the impacts which are primarily not followed or recognized in the ISSB standards are indeed so valid and important that they lead to the risks, and then risks, of course, are to be considered and disclosed under IFRS S1 and S2 standards. So hope this is clear. We will now go back again and revisit the definition of material information. So, and also in the context of what we just said. So as we just noted, materiality has different definitions for different reporting standards and audiences. So we should briefly recap what we mean by material information for the IFRS. In identifying material information to be disclosed, a company will first need to identify the sustainability-related risks and opportunities that could reasonably be expected to affect its prospects. So that'll be just step 1. And once the company has identified those risks and opportunities, it can then determine what information to provide about those risks and opportunities. This is where the materiality definition comes into play. So it'll be this second step. So the definition of material information used in S1 is based on and aligned with the definition found in the IFRS accounting standards. It is information that, if omitted, misstated, or obscured by the other information, could reasonably be expected to influence investor decisions. And this is that definition you see on the slide as well. So in other words, the IASB standards seek to identify disclosures of key information that matters to investors. So an entity determines what constitutes a sustainability-related risk and opportunity based on its facts and circumstances. And entities often already have well-established processes for identifying, assessing, responding to sustainability-related risks and opportunities as a part of the management process. So they should not be starting from scratch, and they should not be fully a new process, but just an add-on to existing processes within the company. There are a few other considerations which should be taken into account while disclosing material informations. So investors have asked for disclosures of material information that IASB standards have been designed to help you gather and disclose it. However, this means that a company does not need to disclose information that is not material, even if the IASB standards include it as a specific requirement. So need to remember a couple of things here. So you need to ensure material information is clearly identifiable and that you use plain language. You should ensure also that material information is not scattered across your disclosures. And you should also remember to include any additional non-material even disclosures if required by regulators, but that need to be ensured that it's clearly identified as such. All right, and then we have another Zoom poll again to test your knowledge on the topics we just discussed. And the question here is, information should be disclosed in the annual reporting when applying IASB standards if, and there are three options here, please do select all which apply. And answer A is omitting the information could reasonably be expected to influence investors' decisions. B, it could reasonably be expected to affect the company's cash flows. And C, it exemplifies the values of the leadership team. So what is meant by what information should be disclosed in the context of the materiality definition? And yeah, I see the answers coming in. I'll give you a moment to have more. And yeah, it looks like you do have a good understanding here of what is required. So the correct answers here are A and B. So these are the matters in which you should think in this context of material information. It's not about values of the leadership team. All right, moving to the next part, and then specifically to the location of the IASB disclosures. So what is required? So disclosures under IASB standards has to accompany the financial statements and be part of the same general purpose financial reporting package. This is what is said in the standards in S1. But S1 does not say where in the reporting package the information shall be provided. This is designed to allow jurisdiction-specific requirements on the location of reporting. The most important factor to consider here is to ensure that sustainability disclosures are provided at the same are provided as a part of the same reporting package as the company's financial statements. Also, they need to be provided at the same time as their related financial statements, and also refer to the same period as the financial statements and be authorized by the same body or individual authorizing the financial statements. Right, and here we'll have an example on the applicability of this requirement. Over to you, Lois.
Thank you, Robert. Yes, and rather than provide a specific example, to illustrate the point that Robert was making about the variation in location of information, we're using findings from the World Business Council for Sustainability Development's 2025 survey called Reporting Matters. So this is where they review the corporate reporting practices from a selection of large global companies. And what they found in 2025 is that standalone sustainability reports remain the predominant approach in 2025. So 54% of the reports in this year's sample are standalone sustainability reports. But if you look below, you can see that there is a decline in standalone reporting. So in 2023, it was 62%, and now it's 54%. So this indicates an increase in exactly what Robert was talking about, the need for sustainability and financial information to appear in the general purpose financial report together and to be connected and integrated. So we see different results across different regions. So in the Americas, the standalone sustainability reporting is quite high, 81%, compared with 39% in Europe. And this is probably because of the development of regulation in Europe that does require more of the connectivity between sustainability and financial information. Of course, this data, these findings were mainly taken from companies declaring their reports in a PDF, so in written, readable format, but we know that digital reporting is increasing, and that's what Robert is going to talk about next. Over to you, Robert.
Yes, indeed. Thank you, Lois. Right, yeah, indeed. We'll be talking now more about influence of the technology and as an emerging consideration for disclosures. So yes, indeed, increasingly corporate reporting is moving from PDF reports towards information on web pages with structured data sets, such as those databases offered by stock exchanges, for example. The IFRS Foundation has created the ISSB taxonomy, which reflects the requirements and accompanying materials of the ISSB standards, so the taxonomy does not introduce a new requirement. A digital taxonomy provides the common elements, or they call it also tags, needed to make your sustainability disclosure machine readable. This makes it easier to take large data sets, like information from entire industry, and bring them all together to analyze them. And yeah, for this reason, the digital reporting has a number of benefits. It makes the reported information easier to use for analysis. Data is structured the same across businesses in a machine-readable format. Tagging information potentially allows for automated checks for quality and consistency. And more data collection and management systems are now compatible with digital reporting taxonomies, improving processing and report preparation. And also, tags can have labels and description in multiple languages. So if you report your quantitative data in one language, someone speaking another language can also understand what it means. So this was about the advantages of the digital reporting. We'll be now moving to the next section will be efficiency and how to communicate effectively. So here shortly, first of all, it's important to understand what effective communication looks like and what is required. So often companies think that if they put all the information they have into a report and everyone will be satisfied. And this is, of course, not the right strategy. And what's more, it will be actually against the core concepts, in particular for presentation. So would be helpful to ask these questions when putting together your disclosures. Is the information you are putting there clear and concise? And by clear what is meant, it might depend on the nature of the information. So, for example, whether it could be clear and easier to follow to present information in tables, graphs, diagrams with the text, and concise. That would mean that disclosures need to avoid boilerplate information, unnecessary duplication of information, and use a clear language. Yes, and moving to the next one, a similar topic, and as about the quality of information disclosed. So you might be also, when watching today, thinking, what is that fuss about? Why are we stressing this so much? And perhaps, your experience focuses on standalone sustainability reports, and they you don't have that much interaction with external audit. So to the accountants watching or the finance departments, I would say, be kind to your colleagues, help them understand the difference in rigor that is required in data collection, oversight, sign-off, etc. for the financial statement, because that would same apply for the sustainability disclosures. So that would mean, for example, disclosure should include comparative information and are to be restated if necessary. Disclosure should avoid unnecessary duplication and use cross-referencing as required. Information has to be material, be connected and aggregated, all disaggregated appropriately. And I mentioned really briefly cross-referencing, and that's a important topic here as well. As there may appear that there's some overlap in the disclosure topics. So, for example, you might have the same governance approach for all sustainability issues. And then what is then intended here, that rather than duplicate certain information, you can use a cross-referencing to enhance efficiency of your disclosures. So what the standard says also about the cross-referencing, that is permitted as long as the other report or cross-referencing to other report is permitted, as the other report is available on the same terms and the same time and the sustainability disclosures. The cross-reference information is assumed to become part of the reporting package. So cross-referencing shall be applied consistently and transparently. It shall not result in information becoming more difficult to understand. And again, we have another example, and over to you, Lois.
Thank you, Robert. And this is an example of using what you might describe as a correspondence table to cross-reference information. It's an example from ArcelorMittal, which is a steel manufacturing company, from their 2024 sustainability report. And they call it a reporting index. So you'll see that down the left-hand column, they're describing IFRS content elements and concepts with which you are now very familiar, I'm sure. Governance, business model, strategy, outlook, etc. In the right-hand column, they're telling us where we can find information about these different content elements. Now, in some cases, the information is found within the sustainability report. So in the case of governance, you can see that they refer us to the governance and risk management section within the 2024 sustainability report. In other cases, they cross-refer us to sources outside the sustainability report. So if you look, for example, at strategy and resource allocation, there's some information within the sustainability report in the executive statement section and the business model section, but there's also more information in the annual report and the 20F, which is a US registration document this company is required to complete. So just one way in which you can do your cross-referencing. Back to you, Robert.
Yes, thank you, Lois. Right. Moving to the next one, important part as well, that there are some mechanism to support preparers to get started with the ISB standards, especially for the ones in emerging economies and the one with not great resources. There are some mechanisms which should help you to apply the standards in the first year, especially. So to start with, one simple thing in place was to adopt the well-known terminology and concepts familiar to preparers, borrowing from the accounting standards, for example. The other two important elements are proportionality and transition reliefs, and I will go through them quickly here. So many requirements in the S1 and S2 are to be applied proportionately, recognizing companies will have a range of capabilities and preparedness on these issues. So for example, qualitative scenario analysis is permitted, and you will see the phrase all reasonable and supportable information at the reporting date without undue cost or effort, or commensurate with skills and capabilities and resources in the number of places. And this is to give the entities this flexibility in applying this standards as long as this objectives are met. So that's about the proportionality, and the other aspect is reliefs for the first year of application have been introduced. So, for example, companies are being able to limit disclosures to climate in the first year. And also there are the possibility to reduce to limit the reporting on greenhouse gas emissions in the first year. I'm sorry, my computer has frozen. And the next limit is making the reporting with the half year results, so half a year later. So that gives you time to prepare your sustainability disclosures. So you have a gap between the financial statements and the sustainability disclosures, which is an extra half a year. So these are the elements which are used in the standards to help you start with the application of the standards. And we'll have another Zoom poll here. Again, it's about the information and the characteristics of the information, and what are the ones, what should be the characteristic of information which it's in accordance with the ICB standards to be the information should be in the standards. What are those characteristics? So we have 4 answers here. A, decision useful, B, material, C, misleading, and D, comparable. So that should be pretty straightforward, and we were mentioning these terms quite a few times today. And indeed, I see that you are answering this correctly. Okay, I'm gonna end the poll right now. And yes, indeed, the information disclosed in accordance with the SB standards should be a decision useful material and comparable. Obviously, it should not be misleading, and most of you answered this correctly. And we have another one. So also about the information. So when the information is decision useful, and we have 5 options here. And yeah, or what is the useful information? Whether there's a relevant and faithfully represent what is proposed to represent. It was comparable, verifiable, timely, and understandable. So these are the 5 characteristics or elements of the useful information. Which of these 5 is correct in accordance with the ISB standards? And again, yes, I'm being rushed now. Okay, so I'm going to end the poll. And then indeed you did well here. All these elements are the characteristics of the decision useful information. So I'll be moving to the next section about the confidence and how the confidence is achieved in the standards. So yeah, so one of the elements in which increase all the characteristics of the disclosed information, which increases the confidence, is using the comparative information. So this comparative information should be revised if there's this, if the circumstances change, and it should be explained the differences why this is the case. The comparative information is something which enhances understandings and provides narrative information for the preceding reporting year, and it gives better context and understanding of the disclosed information. So that's very useful element of the disclosing your sustainability information. And there is the final element, which is a formal statement of compliance. And this is required if you are aiming for asserting the compliance of the standards. You need to have a formal statement in your disclosures. So one important thing here is that commercially sensitive information about sustainability related opportunity can be omitted if the conditions are met. So this is something which the standards allow as well. Just be mindful here that this is only about the opportunity. So if this is commercially sensitive, you are still able to comply with the standards and omit this information. Right, and you can review further this in your handouts, this presentation. There's more information there. On this last slide of this section, there are certain elements we should go through and try to remember, just to give you a summary of those key takeaways. You should have it from this training. And with that, I'll be then handing over to Fiona to give you the summary of this module. Over to you, Fiona.
Great, thanks for that, Robert. That's brilliant. So that brings us to the end of our fourth of the 4 modules, though. So before we wrap up, we'll just take a quick moment to recap on what we've learnt in this module as well. So firstly, we talked there about where to report information. And what was important here was the audience. So thinking about who you're reporting to. So if you're sure that you're clear from the start who the primary user of the information is, that will help you to ensure that the information is right for their needs. And of course, as we've mentioned here, when we're talking about the IFRS disclosure standards, they're particularly designed to serve the information needs of investors. We then talked about efficiency, and I think a key takeaway here is that less is more. So the objective isn't to overload the investors with information, because actually that could be harmful and obscure the information that is material. And so using the standards as you're getting started here is a good guide to make sure that you're providing information that's aligned to what investors want to know about. And finally, we finished there by talking about report user confidence. And especially in the current climate where we see accusations of greenwashing and legal battles over public statements, you want to ensure, of course, that the data that you're reporting is not only accurate, but that you're presenting it in a way that builds confidence among report users. And so that's where the reporting plan that we've been discussing throughout the session and focusing on in our exercises can help you to do this, because if you develop a good disclosure plan, you'll have a clear and documented process for reporting that data. Okay, so we're going to wrap up now with our final Menti exercise together. We'll keep this one quick so that we have time to cover off a few closing points, but we've just opened the final question for you, which is maybe just to share quickly if there's 1 or 2 of those techniques for navigating information that you find to be particularly helpful. So maybe these are tips that you're already using, or tips that you've heard about or that you've seen in other disclosures that you want to adopt. So take a moment and feel free to let us know if you have any thoughts on that. So I see mention here of graphs, navigations, maybe using a web-based platform. I'll just give it a moment and see if anyone else has another thought here. Someone's mentioned Power BI in the chat, mapping, filters, tables. So I think thinking here about visualization is a good suggestion, and thinking about how to balance narrative information with having suitable visuals and maps to help with it. Breaking things up, someone's mentioned with visuals, using tables, thinking about your storytelling, thinking about the navigation aids and digital reports, exactly. Great. Maybe thinking about using simpler wording, exactly. I know that's something we always have to challenge ourselves on in this topic, is to keep our jargon to a minimum. So that's a good reminder there. Clear structures, headings, great. Lots of really good thoughts there, good suggestions, everyone. So I think lots of good ideas to consider adopting if you're not doing so already. Okay, so the final question we have here is just to revisit the question we had, some very quick responses at the start of the session, about how comfortable you were with those different tasks that we set out to do in today's training. So take a moment and reflect on where you think you are now in your understanding of those different areas that we covered today. So on explaining the ISSB, on using the standards, and on how to develop a sustainability reporting strategy. Whilst I'm sure we haven't solved everything in our single training session today, hopefully you're feeling a little bit more comfortable in how you can take these areas forward now. And I see that, I think, reflected in the data, where I think we were just below the midpoint before the session, and now we definitely seem to be slightly above the middle in the comfort level. So that's great to see. Thanks for the feedback there, everyone. And well done in the time you've taken to build that understanding today in the training. Okay, so just a final few slides to cover, and then we'll be allowing you to get back to the rest of your day and your evening. But yes, just to mention a few final points. So firstly, we've mentioned a couple of times about a disclosure plan and the benefits of having a disclosure plan, even though it's not a mandatory thing to do. So if you refer to the homework exercise, which you can find on the event webpage beside the slide handout on the resources part of the page, that homework exercise is all designed to help you to build that disclosure plan and to put into practice what you've learned today with your colleagues. So it's not mandatory to do the homework, it's not necessary to submit it to us, but this is an optional thing that you can use to take forward what you've learned today with your colleagues. So be sure to check that out if it's of interest. And also a few key resources to point you towards for more guidance and information here. So firstly, we have the IFRS Knowledge Hub, which is where you can really get all of the information from IFRS about their standards, the different guidance resources they've published, and also some case studies and examples as well. Another thing to highlight here is the e-learning courses that were released by the IFRS earlier this year. These are CPD certified, self-paced courses, which also offer CPD completion certificates. So be sure to check those out. And of course, the standards themselves are important reading. So we've just included a link to those standards there again in the presentation. And just to mention our partners at the IFC who support this programme, as Wei mentioned at the start of the training, the Beyond the Balance Sheet programme of resources from the IFC is a great resource to utilise as well. So the IFC have also recently released a new free e-learning course called Sustainability Reporting Essentials. So the link to the register for that is on the slides, and we'll share that again in the chat as well. Final resource selection is from the SSE. We've already mentioned the toolkit a number of times and shared these resources, but just to mention, we continue to build out these tools to support you on the ISSB, so be sure to check that out as well. Okay, so a final important point to end on is completion certificates. So a big thank you to everyone who's attended today and taken the time to learn with us on this topic. We know that a half day is a long amount of time and there's a lot to cover, so we're really appreciative of that engagement and the questions you've asked us. So how to get your certificate? To get your certificate, you need to fill out the feedback form, and Lois has just provided the link to access that form in the chat with you. We'd also love, of course, to receive your feedback on the training programme, so please do let us know your thoughts when you fill out the survey. But if you take part in the survey, we'll use the email address that you provide for us there to send you your completion certificate. And you should receive your certificate within about a week of taking part in the training. Be sure to check your spam or junk folders in your email as well if you're missing your certificate, as sometimes they can go there, but you can contact the SSE team at the details at the end of the presentation if you do need any help getting your certificate. If you missed that link that we've just shared in the chat, we'll also send an email via Zoom 24 hours after today's session, and you'll get that link again to complete the survey. But to close things out, I just want to say a final thank you firstly to the SSE official supporters who play a big part in making our work possible, and in particular to our partners on today's training session. So thank you to the IFC and the IFRS Sustainability Capacity Building team. But of course, a particular thank you today to our Mongolian hosts, to the Mongolian Stock Exchange, to the Mongolian Sustainable Finance Association, and of course to the team at UNDP as well. So a big thank you to all of those organizations for their role in making today's training possible. And of course, a thank you as well to our interpreter today, Basra. A big thank you for your great and very important role in today's training. And lastly, of course, a big thank you to all of you who've joined us today as participants. We really appreciate your energy and enthusiasm for the topic and wishing you all the best with your reporting journey. So we'll end the session there. Thanks, everyone, and have a great rest of your day.